Oh, yo, what is up for y'all watching this on the YouTube replay? I hope you're having a great Sunday. I'm going to give you a quick portfolio update, then we'll get into some of the stocks I want to share with you to buy for next week. In the previous stream, after it ended, someone commented, hey, can we analyze Reddit? So yeah, if anyone's watching this on the replay and have a comment you want me to look at, say, hey, can you look at a Reddit stock at the very beginning of the next stream? And I'll almost for sure do it. So someone wanted me to look at Reddit stocks, so we'll pull up Reddit very shortly. It'll be the first stock we look at. And then, or for now, let me give you a quick portfolio update. So this is my main taxable account right here, where I only buy dividend growth stocks. So every stock in here pays a dividend. You've probably heard of a lot of these before, like Meta, Google, McDonald's. And here's my total equity in every stock. My largest holdings are at the top, and the smallest ones are at the bottom. And here's my total percent change. So luckily, we are up on every stock in here. I love being fully transparent. I got nothing to hide. I watch a bunch of other streamers and YouTubers, and they don't really show their total performance, like their year to date, their lifetime performance. I try and do all that over here. Like, look at our Roth IRA. We're only up 4% all time. And we bought a new stock in here, CRMD. I think that's going to be a very cool one. And then here is our Webull portfolio. This is our growthy account. And if we go to all time in the top left here, we're only up 16% all time. So we have underperformed the market all time. Since I started this, we caught some losers in here and some unseen, like ChargePoint. I lost over like 1,500 on. And I got UiPath, Zoom, and some of these other losers. But yeah, mostly we do got some really good performers in here, and we'll pull up a Reddit stock. And then we also have our buy and hold portfolio. So what this is once I buy a stock in here, I try and just hold it for the long run. I try not to ever sell it. And these are all the stocks that I have picked in here. So yeah, and here I'll show you my year-to-date performance in this account. We are up 45% year-to-date. We've had some pretty monstrous performance year-to-date, and it's mainly from this one stock right here, Comfort Systems, our largest holding. About 2-3 weeks ago, they reported earnings, and they were outstanding, and that sent this stock to an all-time high. We also have Amphenol Group that has led to a lot of our performance gains. This company's partnering up with NVIDIA. NVIDIA has this new NVLink spine product that uses 2 miles of copper cables, and they're ordering it from Amphenol Group. So that's really led to a ton of growth from their communication solutions business. It's at a new record. Like the free cash flow numbers were ridiculous. A new record billion of free cash flow. Sales were up 56%, and net income was up 108% to their first ever $1 billion net income quarter. They're growing their net margins. Amphenol's one I actually just bought one more share of not too long ago. So Amphenol's pretty cool. But let me get to Reddit stock. Yeah, someone had left this on the live stream for me. Hey, what up, Chris, Julian? How's it going? Hope y'all are having a great Sunday. And yo, what up, Cheese? How about IREN? Yeah, well, look at IREN. I do not own that one, but I always thought IREN, Iris Energy, is the better play instead of CoreWeave. Way better fundamentals. So here's Reddit stock right here. If we ignore the name Reddit, for example, a lot of people think this is a meme company. I legit think this stock deserves to be at $250. Not financial advice here. I wouldn't buy it right here though, but they're so growthy. I mean, after the sales grew 53%, they grew another 77%. I mean, I don't know how Reddit is pulling this off. They're growing their ARPU. Their average revenue per user went up by 50% year over year. They're the most profitable they've ever been, 90 million of net income. But this balance sheet is the best part. Did you know Reddit literally has no debt whatsoever? So Reddit is debt free, and on the left there, they have over 2 billion of cash, up from 1.7 billion. They're retaining a lot of the money they're making, and the cash flow is just as impressive. This company has like 95% gross margins. So I really love Reddit, and I do own them, so I might be biased, but that's why I love them. And that's why they deserve to be so momentum-y right now, because they really are growing like crazy. So yeah, let's look at IRE. And so let's at any quantum stocks. My favorite quantum plays is literally just Google, IBM. I would stay away from like qubits and riggedy computing. Those are some really overvalued names right here, but they're very momentum-y. So here's IREN. This is a very cool company. I think this is like the better CoreWeave play. They mine Bitcoin and are in data centers. And let's see. Yeah, look at this is the best part about this company is how growthy they've been. So the sales after doubling the previous year tripled again to from 56 mil to 187 million, new record. And not just revenue, but actual profits as well. They made 100 mil of net income this quarter. 25 mil last quarter, 20 mil the previous quarter, and they have a fortress balance sheet as well. So IREN is one I really like. it might be a tough buy over here at $26, but they absolutely deserve to be up 15%. They had some stellar earnings. I didn't expect the net income in that. I did not expect the sales to triple or more than triple. I mean, that was so impressive. So, do you hold Hood? I do actually. So yeah, that is a stock I own here in my kind of risk on portfolio. That's actually my best performing stock of all time, and I regret every share I've ever sold of Robinhood. So yeah, I got 5 shares of Robinhood. Man, I've been in this stock for a long time. I bought it at their IPO. So here's where they IPO'd, and then right, it should show me. Yeah, they're my little buy orders. So I've been holding on to Robinhood for like legit 4 years. Finally made some profits on them, but I regret every share I've ever sold. They're so growthy. They deserve to be at $100+ a share because this is what I love about them. Yeah, hey, I used to own like 50+ shares of Robinhood, uh, but now I only have 5. I made like it was hard not to. I 3x my money and sold most of my position. But here's why they deserve to be 100 plus. I regret every share I've sold. I mean, they're so growthy, so innovative, incredible margins. I mean, the sales are up 45% year over year. But remember this number, 989 million. So out of this 989 million of revenue, 390 million of it was net income. They have ridiculous margins, 40% net margins. So, I mean, they're making a couple hundred million in net income a quarter. Their new Robinhood Gold subscription is making them a ton of money. Hey, I've probably led to that. I have a Robinhood account. I pay for Robinhood Gold. So I've probably contributed to that. But yeah, I own the stock and I'm a customer with them. We can see their net cumulative funded accounts up here too. They have 26.5 million, when the same time last year they only had 24.2 million. That's a nice like 7-8% increase. Pretty cool. How long does it take? Hey, what up, Ryan? Snowflake stock. Yeah, let's do it. Yeah, if you got any stocks you want me to look at, let me know. We're looking to hopefully find some stocks to maybe buy next week. So here is Snowflake right here. I do think this one's a tough buy after its huge rally on earnings, but they did have some good earnings. One thing investors were really worried about this company are the huge net income losses. And here, I'll show you what I mean by that. Because if we just go to the net income, I mean, they're burning through a couple hundred million of net income a quarter. So it's pretty tough. But according to the analyst expectations, they beat on revenue. And they narrowed their net income losses by, it was like a 10-15% beat from their net income losses. So and the huge EBITDA beat as well. So they really did have a good quarter. This is like a Palantir competitor, and they're so growthy. This is probably the best part. They're almost at their first $1 billion revenue quarter, but yeah, sales just literally every quarter hit a new record. That's a nice annual trend of sales. That's what you want to see in a company, just continuing to grow the business. So Snowflake's a nice growth company. I would be careful about buying them now, but they had some good earnings. If they get in the S&P 500, they can go higher. I forgot what stock we were talking about there, Adita. Robinhood. Yeah, Robinhood. I think Interactive Brokers got added instead, which was unfortunate. So Papa Joe said Rocket. So Rocket Mortgage, this company just acquired Redfin, and I think they're about to acquire Mr. Cooper. So this company, they basically are a mortgage lender, mortgage loans, and whenever we go into a lower interest rate environment, I mean, there's going to be so much refinancing happening, and they're here to benefit. So yeah, basically mortgage company that's begging for lower interest rate environments. And we have for next month in September, the market is pricing in with 90% certainty that interest rates are going to get cut next month. So that's interesting for them. That's a mortgage loan company. To be honest with you, my favorite mortgage stock is probably COOP, Mr. Cooper Group, which I read some news. I'm not sure if this company is being acquired by Rocket. They might be. So yeah, Rocket, Mr. Cooper deal. I think Rocket might be buying Mr. Cooper. That's a great asset for Rocket to buy. Okay, IBRX. What's this one here? So Immunity Bio. Hey, what up, Mansoor? What about LAES? Can you look at it? Yeah, we'll check it out. What up, Angel? So here's Immunity Bio. So they're a $2 billion company, and dang, that's unfortunate. So this stock is the same price that it was back in 2019. So they haven't done anything for a long time. Let's go look at their financials and see if we can figure out why. So looks like they just now started selling a product, because if we zoom out to last year, the sales were nothing, 82,000 a quarter, but now it's at a record this quarter, 26 million. And here's the bad news. So the $2 billion company that loses well over 300 million a year, that's 10%, that's 10% plus their entire market cap. So this one, Oh, and they're really leveraged. So look at that. They have twice as much liabilities as assets. So yeah, the sales are growing like crazy. I love this, but I think they're a good thing these losses are narrowing, but they lost 100 mil, over 300 mil this quarter. I mean, that's actually like 15% of the entire company. That one I can see why is at this all-time low level. We really want to see the sales grow even more. So that they're interesting, but I would probably stay away from that one. I'm drinking a Monster Energy, and it's fruit punch flavored, and it's pretty good. Maybe we could look at Monster Energy stock. They get a bunch of free advertising. Okay, so Seal SQ, I think this is another like quantum momentum stock. They're kind of a micro cap. They're only worth $373 million. So let's go see what they do. So, oh no, they're a semiconductor play. So, okay, all the revenue comes from semiconductors. Do they have sales though? Yeah, so not really. For the entire year of 2024, the sales were only 11 million, and it was down 63% from the full year 2023. So, to be honest with you, nothing's really blowing me away here. They're just a very, very small company. Um, what platform? Yeah, hey, Mona, hey, what's up? This is a brokerage where you buy stocks. If you want to get it, it's in the link tree in my bio, first link there. Or you can just type it into Google, just a broker called Moomoo. But Amazon. So yeah, let's do Amazon. What's up? Supreme said Amazon. Hey, yeah, we'll look at COHR. Hey, Plasma. Yeah, hope you're having a good Sunday. So Amazon, a lot of people know them for their online store business. But actually, let me go back to here. I wonder if it breaks it down. It should. No, how far do I got to go back? Okay, so yeah, look at this. A lot of people know Amazon for their online stores. That's 40% of the revenue. Then Amazon, their next biggest businesses are third-party seller services, and then their AWS business, their Amazon Web Services. This business for the full year 2024 is over 100 billion of annual revenue. It's the most valuable part of Amazon. It brings the most of their bottom line. So the AWS business is growing like crazy. They're also an advertising play. They own Twitch, Prime TV. So they're collecting some ad revenue. They're a subscription business because you have to pay for Amazon Prime. I mean, and they got some physical stores. They own 365 Whole Foods, if anyone's heard of that. They're like a healthy grocery store. And another great thing about Amazon is the margin expansion here. The sales are up by 13%. So total revenue is up by 13, but the profits, the net income is up by 35. That means they're growing their net margins, double-digit margins. So yeah, love them. Oh, also, they're a huge CapEx. I love this. They're so innovative. They reinvested $40 billion back into the business, getting new assets. Yeah, hey, Josh, Lil Fashion. This is a brokerage right here. If you want to get it, it's in the link tree in my bio, very first link there. It's an affiliate link, full disclosure. Or you can just type it into Google. It's just a brokerage called Moomoo. But yeah, link tree in bio. What do you think about Gemini IPO? I don't know. I don't think you're talking about the Google Gemini IPO. Okay, Vic said, oh, wait, I wanted to look at this one. COHR, is this coherent? And then we can look at PDD. That's a Chinese company. Hey, actually, I have a new ETF for you guys. If you actually like China, check out CQQQ. So this is the real China tech ETF. And notice one thing I like about this ETF that it doesn't have Alibaba and JD. I'm actually pretty surprised that this one has Pinduoduo in it. Pinduoduo is basically Temu, or it is Temu. They own it. But yeah, the CQQQ is one of my favorite Chinese tech ETFs. But we'll get back to the Pinduoduo in a minute here. Here's Coherent, ticker symbol COHR. What are they worth? So they're a big company. They're worth $14 billion, and it looks like they gap down on earnings. So something investors didn't like there. Oh yeah, so I remember this business. They're growing their networking business like crazy. So that's 60% of the revenue. And check out how growthy it is. It's up 40% from the previous year, nearly $1 billion of revenue. And that makes up for the other two businesses like the materials business. Let me see, how is that doing? Yeah, so materials business fell by 5% year over year, and the lasers revenue fell by 2%. So those two businesses are struggling, but the other half of the business, the networking, is booming, up 40% year over year. It says they lost net income this quarter. They didn't actually. You look at the operating profit, they're usually making around 100 plus million in net income a quarter. But yeah, I like the networking business here. It's growing like crazy. But yeah, maybe investors weren't happy that the other two sides of the business weren't growing. So here's Pinduoduo right here. This is a Chinese company, and they own Temu. If anyone's heard of that app before. So yeah, Let's see how they're doing. So here's their active users. They have 751 million monthly active users. Pretty crazy. So let's see how they're doing. So sales are up by 8% year over year after growing by 85%, bro. That's ridiculous, the growth of this. And they're printing money, and this is in USD. We've already converted the currency from Chinese to USD. They made 4.3 billion in net income this quarter. They're making 3 to 4 billion in net income every quarter. So Pinduoduo is doing great. So, and they're trading at 12 times net income. That's probably fair for a Chinese company, but and with the regulation headwinds around the tariffs. But yeah. Hey, what up, Xander? He says, can we look at I don't know if I can find this one, TRMLF. So yeah, unfortunately, I can't view that one. It's not on this exchange. And Carlos said, could you do UPS? Hey, how's it going? Yeah, so to be honest with you, there are some red flags about this company. Hey, yeah, maybe we can look at SoFi too. I do own some SoFi. So here's UPS right here. A lot of people like this one for the dividend because if you look in the top left, you get a 7.5% dividend. Here's why I think this dividend might be at risk of having to be cut because they actually couldn't afford the dividend in the two most recent quarters. I'll keep it really simple here. They made 1.28 billion of net income this quarter, 1.2 billion last quarter, and guess how much the dividend cost? 1.35 billion. So if they don't at very least make 1.35 billion of net income, they're not able to afford the dividend. And in the past 2 quarters, they didn't make that. So that's what I think is a little tough about this company. And even if they make 1.35 billion, they have no leftover money. All of their net income they made just got eaten by the dividend payout ratio. So they have no leftover cash to, invest in the business, do M&A, anything without having to dilute the shareholders. So, or raise debt. So they're in a tough spot. And I think they need a healthy dividend cut. Oh yeah, wait, let's look at, SoFi right here. Someone said I own URI. Yo, I love United Rentals. That's one of my best performing stocks recently. And here, by the way, let me show you my SoFi Technologies position. This one is in my growthy portfolio right here. Yeah, I got 24 shares of SoFi. So SoFi, I've held this company for many, many years. Another company that I regret every share I've ever sold to this company. They deserve to be at $25 plus. I wouldn't buy, SoFi at $25 plus, but here's what I love about them. They're so growthy, especially this financial services business. They have their own banking charter. This business grew 105% year over year. This is the crazy part. I mean, the business has more than doubled since the previous year, after doubling, after tripling. So look at these year-over-year growth rates in the middle. I almost can't believe it. So this business is so growthy, and that's what's led to that's why it's justified for them to have a bit of a high premium because they're high growth. And same with the lending business, which is half their business. That grew 31% year over year. So people are really taking SoFi serious as well as these profits here. They made 100 mil in net income this quarter, 70 mil last quarter when they used to, lose net income every quarter. So that for all those reasons, I think SoFi deserves to be 25 plus. I'm not selling any of the rest of my shares. I'm gonna just hold them for the long run. What trading? Yeah, hey, Guyana. Yeah, I'm on a brokerage right here where you buy stocks. Again, if you want to get it, it's in the link tree in my bio, very first link there. How about Riggedy? Yeah, Riggedy Computing. What's the ticker symbol for that one again? I remember not liking that one. They're just kind of a very, very small company. Someone said I made 10K on UNH. Oh, hey, good stuff, bro. So let's see. Someone wanted me to look at, no one's going to know about this business, but here, I'll go over it. This is URI. I love this company. They've also been one of my best performing stocks of all time. They're actually now my second largest holding in here, just because they've grown to that position. I'm up 53% on United Rentals now. And I just got a dividend from this, company. Oh yeah, we just bought a share at $7.15, but I just got a little $9 dividend from United Rentals. But check this out right here. They're at all-time highs, and even though they're at all-time highs, they're only trading at 24 times net income. That's why I think this company has the ability to go to 1,000 a share before it really tops out, go to 25, 26 PE. And what do? They just rent stuff. Like you can rent anything from them. Chainsaws, cranes, and this environment recently, it's been very favorable to rent instead of owning or buying new equipment. So the specialty business is growing like crazy. They just bought Yak Mats, which was a genius acquisition, and the general rentals. So they just return so much money to the shareholders. So check this out. The net income actually fell by 2.2% year over year. So net income fell by 2.2, but the net income per share was actually up by 0.5%. That's because they're buying back so much of their own stock. They also have a nice dividend too. But anyway, I do own them. What up, Stinky said, MDB calls played well. Hey, yeah, I saw that. MongoDB was crushing it. Um, yeah, so I love United Rentals. I do own them, so I might be biased. So let's see. CoreWeave, a buy at $100, or do you think it goes back down? Let's see. Let me pull up the NVIDIA portfolio right here. So as we know, NVIDIA owns a bunch of individual stocks, and their main holding has been CoreWeave. They're the largest shareholder of CoreWeave. They were like buying the dip on this company at like 40, $50. One thing I really love about CoreWeave is how growthy they are. Like, check this out. After the sales same time last year were 390 million. Now it's 1.21 billion. That's a 3x increase. So that's a ridiculous growth rate of the sales. And it's expected to keep on growing. In 2 quarters, analysts have it at 1.78 billion. So the growth is going to continue. Let me see. Are there EBITDA expectations? So they are EBITDA positive, but they're not net income positive. They're still expected. Yikes! They're still expected to lose a couple $100 million for the foreseeable future for the next couple of quarters. So that's why I like IREN more. It's like a smaller market cap, a way better fundamentals play. But CoreWeave is interesting. It might be worth looking into under 100. Yeah. I got to do some. Maybe what's the market cap on them? Was it? Oh no, if it's 40 billion plus, it's 50 bill. Okay, so I was thinking this one under a $40 billion market cap for my EBITDA. Doing an EBITDA multiple really quickly in my head. Not even doing a net income multiple, so I'm really giving them the benefit of the doubt here, so maybe less. All right, Eli Lilly versus Envio. So honestly, I love Eli Lilly a lot more than Novo Nordisk, but let's check out Novo Nordisk here. This is the weight loss prescription company. So if you've heard of Ozempic, if you've heard of Elon Musk is on Ozempic. This is the company that owns that, and it's a basically pure weight loss prescription play. But the stock has not been doing too good because their patent for Ozempic actually expires in a couple years. So 93% of the revenue comes from their obesity care products, which is just Ozempic and Wegovy, and they're printed money right now, like $4 billion of after-tax net income plus a quarter. You get a 3.2% dividend yield. So I think this one is really already fully priced in. Them losing the exclusivity of Ozempic. So I think this one's worth putting on the watch list. But do know they aren't a U.S. company. You might think they're a European company. I believe you have to pay some ADR fees for owning it. But yeah, that's why the multiple is so cheap here. They're trading at 14 times net income versus the industry average of 22 because of the future uncertainty. And they did miss on the most recent quarter of net income and EBITDA, but it's really no big deal. So they're pretty cool. Okay. Any thoughts on Palantir? Did you do Alibaba after the earnings? I have not, man. I'll be really quick about Alibaba. The earnings were actually arguably bad. The earnings weren't good, to be honest with you. The only reason the stock went up is because they were announcing they're making a new chip to fill the void that NVIDIA is leaving. So report strong cloud and AI growth. That's great. That grew 26% year over year. Yeah, basically the main reason the stock gapped up, 12%, is because of that news. So yeah, check this out right here. So the actual earnings, they missed on revenue, they beat on net income, which was technically a one-time adjustment, and they missed on EBITDA as well. So yeah, wait, is it updated down here? Yeah, so unfortunately it is not updated down here, so I can't show you the exact numbers, but that's why Alibaba went up. That's basically like the Chinese Amazon. They own AliExpress. Okay. Hey, Dr. One Fly. Dude, I didn't even see that. Thanks so much for all the roses. He just gifted like 10 roses, bro. I really appreciate that. He says, can you check Rich Tech Robotics? Yeah. So unfortunately, I have nothing good to say about this company. I do want to warn you about that. I think they did. The one reason the stock has been booming recently is because they announced a partnership with NVIDIA. And I think it'll show this down here. Where is it? Yeah, Rich Tech Robotics partners with NVIDIA to integrate their Thor platform into next generation robots. Anyway, this company, for right now, I don't think is worth $489 million. So that's a very small market cap, first off. It's a $490 million company, and you're buying a business that basically has no sales. like they don't really have much IP and patents. Like they do 1 million of revenue a quarter. They burn through a bunch of net income a quarter. But they luckily, because of how good the stock has been doing, they've been able, like, if you're wondering how has their assets been growing so much, how is their cash pile growing? It's because they're diluting you as a shareholder. They keep issuing shares to raise cash, which I don't blame them because they know the stock is overvalued. But anyway, out of all the robotics plays out there, I think this one is not one you'd want to just buy and hold forever. I think you'd want to swing trade that one. But if I wanted real robotics exposure, again, I'd pick SYM, a symbiotic, or which this company is a warehouse robotics company. Main customer is Walmart, and Walmart even owns 14% of all the shares here on Symbiotic. And then Amazon, man, Amazon is the best robotics play out there. Obviously not a pure play though. Hey, what up, German? How's it going, man? Someone said Lulu. Hey, Carlos said Lululemon. Let's do it. And Nvidia Semiconductor, Qubits, GitLab. Yeah, we can look at qubits as well. So Unusual Whale bought Rich Tech Robotics. Oh, hey, that's interesting. Okay, so here's Lululemon. This is that apparel company. They sell like shorts and leggings and stuff. Unfortunately, they've been struggling recently. So just and it's also kind of the whole industry, but they gapped down on earnings, and like 20%, and then just continued to keep on bleeding down. And the multiple is dog cheap on this company. Like, what's the PE? Yeah, they're trading at 13 times net income. That is really low historically for them. I think this is the lowest valuation that they've traded at since like 2014 or something. And here's why I like Lululemon. Here's why I'd put this one on the watch list. Hey, Dr. One Fly, thanks again for the 10 roses. I really appreciate you, dude. Here's one reason why here's one reason they're falling, and here's why I'd buy them. So here's the bad news. The revenue grew by 7%, but the profits fell by 2%. So that means the margins did fall by 9% year over year. So they're losing a bit of their pricing power. But here's the good news. They don't pay a dividend, and they're still printing a couple hundred million of net income a quarter. Like, they still made 314 million of net income this quarter. What did Lululemon do with all that money every quarter? Well, they're literally spending $400 million every quarter solely buying back their own stock. It gives you way more ownership in the company. Here's how you can tell. So the net income fell by 2%, but the net income per share grew by 2.3%. That means the share part of the ratio went down a ton. You own 5% plus more of the company. Unfortunately, all those buybacks that they did were probably around the $280 to $300 level. But still, Lululemon, they're a huge buyback play. I do like them still. Okay. Quandale Dingle said, can we look at NVTS, Nvidia Semiconductor? So to be honest with you, I would be very careful with this one. The only NVIDIA saved this company from bankruptcy because this company really was going bankrupt. They were $1 before that huge rally, and the earnings are terrible. If we go to the revenue expectations right here, they're expected to keep on falling. I mean, the revenue is 14 mil this quarter, expected to fall to 9 mil, then 10 mil. So the business, honestly, before that deal had a real chance of bankruptcy. So, every quarter here, it's 20 mil. It's expected to go under 10 million. And this is the bad part. Here's why I'm just staying away from this stock. Even though NVIDIA is helping them out, I would still stay away. They lost 50 mil in net income this quarter. Are analysts expecting that to continue? Kinda. Yeah. So yeah, honestly, I would stay away from NVTS just because just from a financial point of view. But they could still make money on them. So here's Qubits right here. This is D-Wave Quantum. This is the main quantum momentum stock out there, and they have a monster of a market cap. Well, for the industry, they have a $5.4 billion market cap, and I almost can't believe it because it's a $5 billion company with barely any sales. Like, I know so many better companies with like a 2, a 1, a $3 billion market cap, or like significantly less market cap, but have insanely better fundamentals. Like this company, I don't know how they did this, but lost 170 million in net income this quarter. Wait, yeah, okay, so I guess they have a good market cap, so it's all right, but And actually, one thing they've been doing, if you're wondering how has their assets just literally doubled in the past quarter, well, they just diluted the life out of the shareholder. They actually diluted you by a couple $100 million. The way you can tell is you go to the cash from financing activities. Whenever a company issues stock or issues debt, this number will be positive. And as we can see, they issued 530 million of stock, and that's how they fortified their balance sheet. I don't blame them, and it looks like the stock didn't really react. Anyway, point being, if you want a quantum play, this is a momentum quantum stock that I don't think has good fundamentals. I think the market cap should be significantly less, um, personally, but there could still be a lot of money to be made on that. I didn't mean to, bag on your stock there. So here's okay, Dream. What's up, man? He said open door. So this company right here is begging for a lower interest rate environment. What does Open Door do? Well, they literally just flip houses. And check this out. Here's what happened in the last low interest rate environment. Right now, this quarter, the sales were 1.57 billion. If we zoom out to 2022, basically zero interest rate environment, they were printing money, 4 or 5 billion of revenue a quarter. And then as rates hiked up, look what that did to their sales. Fell by 70%, 69%. And now it's just so basically, investors are really excited to see what happens as we go into a lower interest rate environment. To be honest with you, they're not great at flipping houses. And what they just did was they cut a bunch of their staff recently, and they've really helped out their net income losses. So that's headed in the right direction as well. But to be honest with you, I'd be so careful with that one. But I expect them to be really volatile, like probably like move 8% plus every week or something. Hey, all right. So stock market should be open on holiday. Yeah. Hey, so the market is not open on Monday, unfortunately. Normally, we're probably going to be streaming later tonight at 8 p.m. Normally on Sunday at 8 p.m. we stream because the market opens at 8 p.m. But the market won't be open tonight because we got a holiday tomorrow. But we will be. By the way, if you want to hit the follow button, we stream every Sunday. Uh, and we're going to be doing another live stream later tonight. And I sell nothing, by the way. I have no course, book, Discord, WhatsApp, Telegram. And someone said, is that you that DM me? No, I will never follow you, DM you, message you. I don't sell anything. That was not me. If you look up Nathan Robert, there's a bunch of people impersonating me. It's so unfortunate. I can't do nothing about it. So, all right. Stock market should be open on. Okay. What's the best quantum stock in your opinion? You're going to call me crazy, but it would be Google, IBM, Oracle, Microsoft, Honeywell. One of those picks. And obviously, you're saying it's not a pure quantum play. But here's the thing: you get like you want to get the industry leader like Google, IBM, like they have the money and the talent to be the industry leaders. Google already is the leader in quantum, but it's just such a small part of the business. It's not. It'll be a growth factor in the future, but it's not really priced in to any of the market cap. Google's like an ETF in one, of course. They own Google Search. They literally own YouTube. They own Android, the whole operating system, and the Google Play Store. If you go spend $100 in the Google Play Store on Clash of Clans, $30 of it goes back to Google as a royalty. And they buy back, dude. They also own Waymo, quantum chips, TPUs. They made 28 billion of net income this quarter. What is Google doing with 28 billion in net income a quarter? Well, they're spending 15 billion a quarter solely buying back their own stock. And here's what that does. Net income's up by 19, but net income per share is up by 22.2. Thanks to the share buybacks. I love Google. Okay, Honeywell. Oh yeah, Honeywell. Ticker symbol HON. I think they're actually doing some sort of split off of the two businesses. I don't remember because they have a nice aerospace technology on Honeywell is really big. And if you buy the stock, you get a 2% dividend yield. Am I on YouTube? Yeah, I am. I'm streaming on YouTube as well. That's actually the number one way to support me. If y'all want to support me, because I saw nothing, the best way to support me is just watch the stream from YouTube, subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. Just type that into YouTube, Nathan Robert, or it's in the link tree in my bio. It's like the second link there in my link tree, my YouTube channel. All right, so let's see. Someone said, able to give me some advice on SBET. So I actually can't cover this company, really. I can't talk about it on TikTok because of the industry that they're in. So affiliate marketing and Ethereum staking. So I guess 5% of the revenue comes from Ethereum staking. Look at, oh, dang, it looks like they have no revenue. So check this out. I mean, the sales were 600,000 and they lost 100 mil this quarter. The balance sheet just like monstered higher. I would love to know what happened there. Maybe it's the Ethereum they own. I don't know. It looks like it's like basically a revenue-less company. I got to do more research on them. It might be some Ethereum staking holding company. I don't know. Hey, what up, Ace? Good to see y'all. Uh, okay, so let's see here. Last hey, yeah. So I have a huge stake in SMR. So yeah, basically there's a lot of EOs, executive orders, stimulating these SMRs, the small nuclear reactors, and here's the thing about this one though. They just got their first contract basically. Like before today, they had no sales, 400,000. But now they finally have one big contract, 34 mil of revenue. These year-over-year growth rates are really incredible. But I still think this one's a tough, out of all the nuclear names out there, I'd rather go right now. If I had to pick one right now, I'd rather pick Constellation Energy or Vistra Energy because I don't think this one's worth $10 billion yet. With this little revenue. But this one just moves with momentum with all the nuclear stocks. Here, I'll show you. I've looked at every single nuclear stock. I've looked at that one. I've looked at Oklo. Dude, I don't know how Oklo's worth 10 billion. That still amazes me. But my main nuclear play is actually CEG, Constellation Energy. They literally own 50% of all the US nuclear reactors. It's the purest play for nuclear energy. They're the best out there. So in my opinion, if you want real nuclear exposure, just buy and hold forever. CEG is the way to go. Hey, what up? Jerch or J Rich, get with the Rose. I really appreciate you. He said favorite ETF. So first off, it would be VOO, just the S&P 500. But then I also really like QQQM. It performs a little better than the S&P 500 every year because they're a little bit more tech heavy. So this is a tech heavy. It's the QQQ with a lower expense ratio. So this is the NASDAQ 100 ETF. And here's how it breaks up your money. So if you put $100 in here, $10 goes to NVIDIA, $9 to Microsoft, $8 to Apple, 6 Amazon, Broadcom, Meta, Netflix, Tesla. I love all these companies. I happily own all these companies individually. So this one usually compounds at like 8 to 10% a year, a little better than the S&P. So yeah, that's the NASDAQ 100 with the lowest expense ratio. It's cheaper than the QQQ. It's the exact same thing as the QQQ, but with the lower expense ratio. So hey, Mo said, what's up, man? So Honey, please. You know what? Can you clue us in on Honeywell? So yeah, let's look at Honeywell stock. So they have a lot of different businesses right here. So first off, if you buy this stock, you get a very nice yield, 2% dividend yield. So that's not included in the stock price right here. It doesn't include the reinvested dividends. So your total return has been a little bit better on Honeywell. And check this out. Look at their aerospace technologies business. How has that grown recently? I'm curious. Yeah, it grows double digits. It's at a new record. So yeah, that's very good growth. I mean, let's see. Industrial automation, that business is down 5%. Energy business is up by 15. That's pretty good. Building automation, that's up by 16%. So I like how diversified Honeywell is. 60% of the revenue comes from the US. And check out this net income down here. It's really consistent, 1.4, 1.5 billion in net income every quarter. Are they doing share buybacks? They are. So hold up. They've bought back 2.5% of all the shares. You get a 2% yield, 2.5% buyback yield. Yeah, check that out. They spent 1.65 billion of net income on buybacks this quarter, 1.9 bill last quarter, 300 mil. So they're very shareholder friendly recently. So Honeywell is one I really like. They're also in quantum as well. Jumbo, what's up, brother? He said, can we look at Axon? This company, let me put them on. This is in my never sell watch list. If I can get Axon at the right price, this is one of the best stocks in the market, in my opinion. But I'd love to get it they're so expensive, like a 4-peg, very expensive. But check this out right here. Control devices, they're working a lot with the government. That business is up 28% year over year. Software and services is up 38%. Well, should be better if we look at it down here. So yeah, total revenue is up 32% year over year after growing 34% from the previous year. The net income, they're having these little issues right now, but it's no big deal. That's why the PE is so expensive. The future net income is supposed to be a lot higher, but they're having a little bit of struggles with their net income right now. But still, I still really like this name, and it's because they're struggling with their net income right now. That's why I'm not buying them yet. I want to buy them at a much lower price than where they're at today. But this one's heavily on my watch list. I love Axon. I love Axon Enterprise. What research? Yeah, hey, Rand, again, I'm on a broker right here. Brokerage, if you want to get it, it's in the link tree in my bio, first link there. And yo, Invested09, thanks so much for all the roses there. I really appreciate you. It's Ethereum treasury company. I have a big position on it. Oh, dang. HE Carefree. That's unfortunate. Hey, what up, Aqua? Dream said, how about SOGP? Hey, let's check that one out. So this is Sound Group. Uh, I've never heard of this company before, but yeah, let's check it out. So they had a huge little gap up the day before yesterday. Though they reported earnings, this is a Chinese company though. So if you look in the top right, we don't really cover these companies on the channel here. They're only worth $59 million. So that's a very small market cap, and we have to convert their currency from Chinese yuan to USD. So yeah, all the revenue comes from China. Let's check out how the fundamentals are looking. Oh, this is from 2023. So they don't even make their numbers. Okay, so never mind. We can't even look at that stock. They're 56 million Chinese. I'd be so careful. I wouldn't buy them. So here's, oh yeah, Invested09. Thanks so much for the roses again. I appreciate that. He said Next Era Energy. So this is the very largest utility stock in the world. They're in the S&P 500. They own Florida Power and Light. So if you live in Florida, there's a high chance your utility bill is through this company. And hey, if you're paying them a utility bill every month, why not own some of the company? They're a regulated utility, so even if their customers don't pay, the government still gives them that money. I love regulated utilities. That's such a safe business. You're almost certainly, that's why the VPU ETF is so cool. You're almost certainly getting 6 to 7% of your money back every year, guaranteed from the government. But it's a dual-edged sword. You can't really get over a 7% yearly return like you could with an unregulated utility like a CEG. But anyway, check this out. They're a $150 billion company trading at 25 times net income. That's pretty fair for a utility. Or let's see. Or well, the industry averages an 18. Actually, the PE is technically lower than this. I know they've had some one-time adjustments. Yeah, look at Florida Power and Light. It's huge. Just in Florida, they do $4 billion of revenue a quarter just in Florida. So they're ridiculously huge. And they print money. So like if you look at last quarter, it said they only made 464 million of net income. It was actually more than that. That's why the PE ratio is a 25. It's actually quite a bit lower. It's probably more like a 20 because they had this little one-time adjustment. Still, they're making a bunch of net income, and they have a very nice, sustainable 3% dividend. Pretty cool. So yeah, it's a nice, probably safest utility out there. And if you just go to the whole entire utility ETF, ticker symbol VPU, which literally just returns 7% a year very consistently, the largest holding in there is Next Era Energy, and then it's CEG, Constellation Energy, and then Southern Company. Dude, Southern Company is another monster utility that if you want a utility, just buy, never sell. Another one with the 3% plus dividend, completely safe. You should get 7% around there a year. Not financial advice with these. They own Southern Company owns Georgia Power and Light. So Next Era Energy's Florida, then that one's Georgia. All utilities are local monopolies. Okay, oh yeah, hey Kevka, this is a brokerage right here where you buy stocks. It's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. So it's also full disclosure, it's an affiliate link too. So if you go to link tree in my bio, first link there, we'll both actually get some free stocks if you sign up. Anyway, so let's keep going here. Can you look at Link Home Holdings? Yeah, what's the ticker symbol for that one? I don't know. The A said, I like SMPO. SMP. Oh, then we can look at BBAI. Wait, SMPO. I can't find that stock, unfortunately. Or Snow seems awesome too. Here, yeah, let's look at Snowflake right here. So here was Snowflake. They reported earnings 2 days ago, and the earnings were pretty good. According to what the analyst expected. So this orange line is what the analysts were expecting. And look at that. They had a nice little 10% beat on revenue. And this is the best part. They narrowed the net income losses because investors, one thing they're really worried about with Snowflake are these huge net income losses. And the losses are narrowing at a faster rate than analysts expected. So that's pretty cool. But bad news, they're still losing a couple $100 million a quarter, but good news, they're super growthy. They're nearly at their first ever $1 billion revenue quarter. It was at 996, pretty good. Just hits a new record every quarter there. That's one thing I do like about Snowflake. They're like Palantir's biggest competitor. They're so growthy as well. So yeah. Let's see here. Can you do the Honest Company? So this one's a mixed bag. Yeah, I'll be quick about this one too. So if you look at the top right, very small company, of course, a $440 million company. So they're very small. They're only worth 440 million. One thing I think investors have been disappointed with is just the slow growth. Like the total sales of the business, the lifeblood, it's only up by 0.4% year over year. I mean, that doesn't even beat inflation. So the total sales are just up by 0.4%. But here's the good news. Again, they're a $400 million company, and they're finally making net income, 4 million, 3 million. So that's the good news that they're making net income. But we do want to see the sales kind of grow more. They just sell a commodity. They literally just sell diapers and wipes. That's most of the business. They do have a lot of cash on hand. They have like 60 million of net cash. So literally like 15% of this company's entire market cap is their cash on hand. Yeah. Ticker is, let's see, LHAI. Or maybe it's IHAI. Hey, then we'll look at, United Healthcare. So Innovative Holdings Alliance. So yeah, we don't really cover these kind of stocks on here. This one is, especially this one, because if you look again, the whole entire company is worth $2.8 million. I'm sure someone in here is worth more than that. I'm sure someone could buy this whole company, but they're a $2.8 million company. They don't sell anything. The revenue says no data because they've never sold anything. So we won't cover them. I'd be so careful with that one, my friend. So yeah, let's look at UNH right here. Actually, you know who just bought the dip on UNH? And these are all super investors right here, so they have to make all their trades public by SEC law. Warren Buffett, we can see his holding changes. His new position is ticker symbol UNH. He also bought some DR Horton. He's getting to a lot of the home builders. He bought LAMR. This is a pure billboard REIT. They own 60% of all the billboards in the U.S., largest market share. He bought more Pool and Lennar. Here's the thing. Whenever Warren Buffett buys a company, he always does his due diligence. He doesn't just buy any meme stock. So that's why the stock rallied up so much on this day right here, because Warren Buffett just bought the dip on them. Also, Warren Buffett bought his UNH shares average at $320 a share. So it's lower today than where he bought it at. That might be another reason why they rallied up so much. We're a customer of UNH. We use their OptumRx, and check out how growthy the OptumRx business has been for them. It's up 19% year over year. So the business has been growing like crazy, but it's the profits that have been worrying investors in the uncertain future, because that's why the multiple is so low right here. They're trading at 13 times net income. Historically, they trade at 25 plus times net income. Because if we look at this analyst expectations right here, the net income per share is supposed to go from $6 to $1.70, which won't even be able to afford the dividends. So, but I do think that that's mostly priced in, and it might not be as bad as analysts expect. You also get a nice yield here, a 2.75% yield. All that being said, I wouldn't make it as a huge position, UNH. I'd probably look at it like more seriously under $300 a share, because it might go back there. But yeah. Hey, try not to spam there. Hold on, I got a self mod here. Okay. All right. Have you tried trading those? No, I've actually never used SoFi, but I am a SoFi shareholder. They're one of my best performing stocks of all time here in my Webull portfolio. I regret every share I've ever sold, but yeah, we got 24 shares of SoFi. Yeah, here's my total lifetime return in here. We're only up 16% all time in there. All right, so what kind of business even allowed to run like that? Yeah, I don't even know how they're still listed there. GB4, I get you. Can you do Care Cloud? What is Care Cloud? Is that CCLD? Someone said. Oh, let's check it out. It sounds interesting. So, what's the market cap? So a very, very small company. They're only worth $160 million. And the stock's been flat for a while. They're the same price as they were back in 2018. So let's just go analyze them. So healthcare information technology. So here might be why. Looks like the business isn't growing too much. The sales are down by 2% year over year. And if we go to their medical practice management business, that's down by 6% year over year. So that might be why investors aren't too happy. The total sales of the business are down by 2%. But good news, and I just saw this. I mean, they're making net income every quarter. Is that real? Yeah, that's real. So they're making a lot of net income, and they have a very good balance sheet. Look at that. The liabilities the same time last year were 41% of the assets. Now it's only 25%. So they've deleveraged. They're making net income every quarter. So that's the good news. It's the fact that they're profitable. They must trade at a very cheap multiple. Hold on here. Let me go to the PE right here. Is it like a 12 or... Oh, it says negative. Oh, well. So anyway, they're making net income every quarter. That's the most impressive part. Why does it say net income loss? They've made this should be EPS positive. Oh, wait, they've diluted you so much. Actually, that's crazy. They made net income, but the net income per share was still negative. That means in the past they've diluted you very much. I actually did not expect that. Okay, anyway. Sorry, that was a bit boring. Ooh, here's a healthcare play that I really like, and I do own this one. So normally I would never. So here's another company. We just looked at a stock that's worth 160 million. Here's a company worth 300 million. So check this out right here. Here's a stock I normally never recommend, but and if you do like this one, I'd never make it a meaningful position. Like I have literally 150 bucks in this stock. But yeah, they're down pretty much at their all-time low price. Here is why this stock right here, because I don't normally buy stocks unless I really see something valuable in their financials. Here's what I found some value in this. And I'll just show you the numbers for yourself. You can draw your own conclusion. So if you look in the top right, they're worth $385 million. Here's the crazy part. The whole company's worth $385 million. They have no debt whatsoever and $81 million of cash. So they have $80 million of cash, no debt whatsoever. So a huge chunk of their market cap, like 25%, is just cash on hand. And they're super growthy. They're the highest amount of sales that they've ever been at. This same time last year, they weren't FDA approved yet. They basically had no sales, 400, 500,000. Now it's 25 million in the most recent quarter. And the best part is, out of that 25 million, 2 million of that was net income. 1 million last quarter, 69% increase. They're going to be making net income every quarter. So you're paying $380 million market cap for a business with $80 million in cash, growing their sales tremendously, going to be making net income every quarter. And the analysts are expecting that too. So they sell this liver kit, a Haptazo kit. So that's what's led to all their growth recently. So that's why I actually picked up a very, very little amount of Delcath. So as much as I love them, I wouldn't make them as a meaningful size position. That's why I got 150 bucks of them. Hey, what up, John? How's your portfolio? Yeah, the market's not open today, but my portfolio is doing great. Here, I'll be really quick about this. Man, I got a Fruit Punch Monster Energy right here. I've never had one before, and they're delicious. Okay, so yeah, we're up 19% the past year in my main taxable account. Here's my total percent change on every stock. Luckily, we are green on every stock in here. Okay, so let's keep going here. Could you do Rolls-Royce? Yeah, let's do it. RYCEY. This is Rolls-Royce stock. So a lot of people know Rolls-Royce for their cars. But this business, a lot of the growth has come from the aerospace and defense business. And I'll just show you that right here. So check that out. 50% of the revenue comes from their civil aerospace. They make jet plane engines that are very nice. And yeah, 24% comes from defense. So aerospace and defense are their two biggest segments of business, and they're also very profitable. So the first half of 2025, so for the last 6 months, they made $6 billion in net income. They're a European company, so they report in like halves or whatever. But anyway, $6 billion of net income in the past 6 months. That's $1 billion of net income a month of after-tax net income. Pretty cool. Oh, B69 said APLD. So that's a company owned by NVIDIA. So if we go to the NVIDIA portfolio right here, obviously they own a bunch of CoreWeave, but one stock they own is APLD as well. And one of the reasons APLD has been so momentum-y, like right here, they gapped up. On earnings, they gapped up again, is because of their huge partnership with CoreWeave. So CoreWeave and APLD went to this huge synergistic partnership recently. So that's what's been leading to a lot of their growth, but they are still losing a bit of money. I would be careful. I wouldn't, if I did want to get APLD, it's tough at 16 bucks, and I wouldn't make it as a meaningful size position, but I see why investors really like that one. NVIDIA owns it. Being owned by NVIDIA has its benefits with that CoreWeave partnership, so they're pretty cool. Okay, so I'm up 65% this year. Yo, Lil Fashion, that's awesome, dude. Dang. Okay, so, hey, what up, 12 o'clock? So, I have lucked out on LYG. What up, Eric? LYG stock. What's this one? So, Lloyd's Banking. Let's do it. Oh, and someone said Blink Charging. Yo, Blink Charging is very risky. I would never buy that one, but I can look at it in a minute here. Oh, and someone said Duolingo. I love Duolingo stock. So, here's Lloyd's Banking. Yeah, man, look at the stock price appreciation that it's had recently. I don't think they're American. So yeah, check that out. They're a UK bank. So we'll convert their currency to USD, and let's see. Yeah, so 100% of the revenue comes from the UK. Let's see what they're doing. So yeah, check that out. The net income increased by 25% from the previous year. So the net income's doing great. Uh, and not only have you gotten a nice stock price appreciation, but you get a 4% yield, and they raise their dividend every year. Look, they've more than doubled their dividend in just 3 years. So they've been a very shareholder friendly company. So yeah, that's LYG, Lloyd Banking. Hey, what up, Accelerate? 12 o'clock. Hi, man. Thoughts on APH? Yeah, we'll look at APH too. So I want to go over this company. Here's a stock that I would avoid. And here's how you can do the math for yourself to see if whenever you look at a stock like this, you're like, dang, it's at an all-time low. It might be time to buy the dip on this one. Here's why I don't think that's the case. Here's why I think they're going to continue to keep on hitting new all-time lows, not financial advice. I wouldn't short it though, because any sort of small news, it'll gap up by 40%, but then slowly bleed out. But look at this market cap right here. Their whole company is worth $123 million. So kind of think about this logically here. You're buying a business that's worth $123 million, and this company lost 31 mil of net income this quarter. That's legit 15% of the business. 20 mil last quarter, 70 million the previous quarter, 80. That's more. They have lost double their entire company's worth in net income in the past year. And they've lost all this net income all for a business that has declined by 14% year over year. So, and look what that does to the balance sheet. Do whenever you lose net income, that money has to come from somewhere. And look at how the balance sheet has just been deplenished. I mean, I could not buy Blink Charging, even though they're at all-time lows. Just there's a high chance of bankruptcy there. Not financial advice, but very sad. And I actually used to own ChargePoint. I lost a lot of money on ChargePoint. I'm in the chunk for the long haul. Some mini nuclear reactor success. Hey, what up, Liam? Nice. So here's Amphenol Group. This company is one of the best investments I've made this year. And I plan to hold it forever at this point. I mean, I don't think it'll ever go back to my cost basis. This company had a huge partnership with NVIDIA. NVIDIA has this new NVLink spine product that uses 2 miles of copper cables that they're mainly ordering from Amphenol Group. And that's grown their communication solutions business like crazy. I mean, look at that up here at a new record. The harsh environment solutions as well at a new record. Interconnect sensors is up 16%. So all three businesses are growing like crazy. This is the best part. I mean, they're in the S&P 500. What other S&P 500 company grew the revenue by 56% year over year? That's some NVIDIA type growth. And not just the sales that are up 56%, but the net income is up by 108%. That means they're expanding their net margin, a 20% net margin. No wonder this company's at an all-time high. They absolutely deserve it. Not even I expected that. Also, the free cash flow is ridiculous here. New record free cash flow number. They're a serial acquirer. They acquire so many businesses. That's the main way they return money to the shareholder. So yeah, you get a small 0.61% dividend, but they mainly buy companies for synergistic M&A. So yeah. Hold on here. There we go. All right, Andrew Money. He said, I wanted to see his message. Hold on there. What is your total profit and loss for all time? Well, here, someone's asking here. Look, here, if you got any questions for me, I always try to be fully transparent. All time in this account, we are up 110% all time versus the S&P 500 up 55% all time. And check this out. Look, here's when I first started. Here's why you don't start with a lot of money. Here in 2023, my account was worth $168. And, all these little blue things right here is every time I deposited money. So for the first couple years, my account was only worth like $200. Then I deposited, it chilled at a couple thousand for a while. And it slowly increased with all my deposits. And now we're at a new record. And anyway, I have multiple accounts here, by the way, like this account all time. If you look in the top left there, the open P&L, we're only up 16% all time in here. So anyway, let's get back to the analysis here, though. Try not to spam there. We don't tolerate that. But yeah, anyway. Let's see. Thoughts on EEE and Lyft? Let's check them out. So, are you talking about this Canadian company? You must be talking about EEE Exploration. I don't think you are, because there's no volume and there's no financials, unfortunately, either. All right. So here's Lyft right here. Oh, and Hyperlink. What's up, man? We can look at Tempest AI, Uber, SoundHound AI. Remind me to look at all these. What's the app you're using? Yeah, hey, again, this is a brokerage right here where you buy stocks. It's in the link tree in my bio, the very first link there. We're or you can just type it into Google, broker called Moomoo. But anyway, here's Lyft. This is like an Uber competitor, and they're finally the most profitable they've ever been. Check this out right here. When we go to their revenue, it's up 10% year over year after growing 41%. So they're continuing this growth, and they're finally net income positive. If we zoom out here, they used to burn through a lot of money, a couple hundred mil a quarter they were burning, but now they're making net income every quarter, and the free cash flow has been ridiculous as well. They're making a couple hundred mil of free cash flow a quarter. They're finally net income positive. So the future is bright, I think, for Lyft because they're finally making profits. So out of all the times to ever buy Lyft, now seems decent. But to be honest with you, I like Uber more. I really like Uber. So you know what? Let's look at Uber really quick. What up, Fork? He said Uber. I appreciate you, man. How's it going? Happy Sunday, by the way. Here's Uber stock. We just look at Lyft. Here's a cool metric we get. Here's their monthly active users. So they actually have 180 million monthly active users when their same time last year, they had 156 million. And they're still growing. Like they have this mobility business that's up 18% year over year. That's like ride sharing. And then they have the delivery business, which is Uber Eats. I don't know how, but it grew another 25% year over year after growing 18%. I mean, this growth of Uber Eats has been incredible, and it's doing wonders for the free cash flow. They're printing $2 billion plus a free cash flow a quarter. Net income's just as good, over $1 billion of net income a quarter. Uber prints money. So yeah, they just collect a little fee every time you book a ride or book a Uber Eats delivery. They just collect basically royalty, a high margin fee. Okay, would you rather put 100,000 in JP? I would probably rather just put it in the S&P 500, but I haven't looked into it. I'd probably either one. They'd probably perform similar. They're both like They're both Nasdaq covered call ETFs. So I don't know, Maximus. They should both. It'd be like, would you rather own like the S&P 500 or QQQ. Anyway, here's Duolingo right here. This company, I think, is worth looking. In 1986, University of Pennsylvania. Hey, what up, Cedar? And Circle. What up, Zachary? You said Circle stock. Yeah, we can look at Circle too. So check this out right here. Here is Duolingo. It's that boring language learning app. If you've heard of them before, you just like learn English and learn other languages on it. And whenever you have the app, you either have to pay for a subscription or see a bunch of ads. And basically, a lot of people pay for the subscription because look at these year-over-year growth rates in the middle. I love subscription model companies. It's all reoccurring revenue, and it just grows like crazy. It's up 50% year over year after going 50% the previous year and another 50% the previous year. So the growth is just spiraling higher very consistently to a new record every quarter. I cannot believe the subscription revenue growth. Also, since you see a bunch of ads on there, their advertising revenue is up by 55% year over year. So both main segments of business are growing like crazy. So sales are up by 41, profits are up by 83. So that means they're growing their net margins. The free cash flow is incredible. It's up by 60% year over year. They finally now are debt free. They just deleveraged. The assets went down with the liabilities. So don't worry that it shrunk like this, that you really focus on this ratio, which shrunk in half. Great news at Duolingo. I think that one's worth buying at this point, but not a huge position yet. But that one's worth looking into. I put them on the watch list, not financial advice. What happens is, hey, HB, again, this is a broker. If you want to get it, Linktree and bio, first link there. It's where you buy stocks. Or you can just type it into Google. Brokerage called Moomoo. Zachary said Circle stocks. So yeah, this is that stablecoin issuer. You've heard of USDC. This is the company that owns that and like manages it. So here's Circle. Let's see how they're doing. So what did they report earnings? So yeah, they just IPO'd, so there's not too much data we get. But one thing we can see is how growthy the sales have been. So the sales are up by 53% year over year. That's very nice growth. There's been a lot of positive regulation in Circle's favor, like with the Genius Act. Some of these stablecoin acts are in benefit of Circle. They're a $30 billion company. This was their IPO fee, so this technically wasn't real, this $400 million loss. But yeah, I do like Circle, but I don't own them. I just got into SAN this week. SAN. And I know nothing about it other than they deliver dividends. Hey, let's check it out, Eric. Let's see if I can help you find out a little more about this company. So this is Banco Santander. Looks like they're not an American company, if I had to guess. So yeah, look at that. 45% of the revenue comes from Latin America, then Europe, then only 13% of the revenue comes from the US. So it's like an international bank place. So check that out. 88% of the revenue comes from the retail banking, and then they're in corporate and investment banking. Let's see how the business is doing though. So sales are up by 1%, and they're making a lot of net income. Wow, the margins have grown. They're making 4 bill plus in net income every quarter. This is in USD. And you're right. Check that out. You get a 2.5% dividend. The payout ratio is only at 25%. So, hey, it's a bank. Pretty nice. Yeah, well, the bank's got a lot of good yields. Hey, what up, Milan? Good afternoon. Hey, what up, Josh? I hope you're having a great Sunday. Yeah, Raphael, this is a broker. Link tree in bio, the very first link there if you want to get it. It's an affiliate link, full disclosure. So if you sign up, we'll both get some free stocks. But you can just type it into Google, just a brokerage called Moomoo or link tree in bio. Any option suggestions? So we don't really do. I actually don't. I haven't done a single option in over a year. So I haven't done options in a long time. I mainly just like to buy and hold stocks. But here's a stock that has impressed me. But honestly, I own some stocks that move like call options, like, Dave, Reddit, Robinhood, SoFi, AMD, some of these super micro, some of these stocks move like call options. So anyway, here's Carvana. This company literally was priced for bankruptcy. This was a $5 stock. They burned all the bondholders. Uh, and now they're at an all-time high. I can't believe Carvana, how good they're doing. And it's because check this out. I don't know how, but they're printing money. You know, they make a couple hundred million in net income a quarter. When if we zoom out, here's why they were going bankrupt. They were burning through money, billions, 3 billion just in 1 year they lost. But now this company's finally making a couple hundred million net income every quarter. So congrats to Carvana. I don't know how, but the sales are up by 42% year over year. The used car buying market must be booming with the tariffs or something. But yeah, I don't know if I'd buy this one at all time highs. What's the multiple? Yeah, 92 times net income, but uh, congrats if you own that one. They've been doing great. All right, so thoughts on PayPal? Hey, let's do it. So PYPL. There's one thing I like about this company. This stock looks like a DocuSign, a Peloton, a Roku, where they peaked in 2021 and they really haven't recovered since. And here's one reason why PayPal's not too growthy. Like the sales are up by 5% year over year. They were up 1% year over year the last quarter. So they really need to grow this revenue more. But here's the good news. They're making a lot of money. They're making $1 billion plus of net income every quarter. And what is PayPal doing with the $1 billion plus of extra net income a quarter because they don't pay a dividend? Well, they're spending it all on share buybacks. They're spending over $1 billion to 1.2 billion of net income every quarter, solely buying back their own stock. And here's what that does for you as a shareholder. Because check this out, the net income is up by 11, but the net income per share is up by 19. You own 8%. 8% more of the company than you did a year ago. No other company is doing that sort of buybacks. It's actually ridiculous. So that's the one thing I love about them. They were trading at a low PE, like a 15x multiple, just because the slow sales growth. But I almost wish they would, instead of buying back their own stock, spend billions. Like they're spending $4 billion a year on buybacks. They spend $4 billion a year, buying a new company. Like they used to do so many nice acquisitions. Like they own Venmo, Honey, the Chrome extension. Like they used to be more. So I like to see them. But I think they're worth buying, but not. I don't know if I expect them to really outperform the market in the long run with that single-digit sales growth. Okay, here we go. Thoughts on partnership with eBay ending hurt them. What? Oh, with PayPal. Oh yeah. Hey, you know what? eBay is public as well. They're a huge e-commerce place. So I guess I kind of remember that on eBay you used to like almost exclusively pay with PayPal, or that was like the easiest main way to do it. I guess they removed that. Cool thing about eBay is they're like the cheapest e-commerce play out there. They trade at 20 times net income. That's they're kind of slow. How are the sales doing? Yeah, the sales are up by 6% year over year. Not bad. To be honest with you, I can't remember the last time I've been on eBay. I would just go on Amazon, but these net income numbers are fantastic. They're printing money, What are the gross margins over here? Yeah, 70% gross margins. So still, eBay's doing pretty good. They're making a 2 billion plus in net income. So it said BMNR. That's the Bitmine company. So Tom Lee, anyone know who Tom Lee is? Super Bowl guy. Whenever you work for this company, stock's up 1,000% since. It's basically an Ethereum holdings company. They mainly just hold Bitcoin, revenue from self-mining. Um, but you basically just trade this company off its net asset value of its Ethereum. So it should just kind of do whatever Ethereum does. Sometimes if Ethereum's up 1%, this goes up like 2%, stuff like that. So anyway, yeah, they're like an Ethereum proxy. Instacart. Hey, let's do that one. So CART, one reason, and there's a huge down candlestick. The reason the stock fell this day, there was no earnings or anything this day, but Amazon released in over 1,000 cities a huge expansion to their same day delivery grocery stores. We tried it. We tried the Amazon grocery delivery. It worked great. We ordered some eggs, and some of the eggs, 2 eggs were cracked, and they just gave us a whole refund on the eggs, which is pretty nice of them. Amazon's great. But yeah, here's Instacart. The reason they fell this day is because of the increased competition now from Amazon. Instacart used to fill the void that Amazon didn't do. And Walmart's also expanding their same day delivery stuff. But check this out. Kroger is too. They're still making a bunch of money right now. Instacart's making easily over 100 million of after-tax net income a quarter. And they have a really good balance sheet. I believe they have no net debt. They have $1.6 billion of cash, basically no debt. So basically $1 billion in net cash. What's the market cap? 11 billion. So they actually traded at a very low valuation. 10% of their market cap is cash on hand, and they're making 100 million plus in net income a quarter. And it looks like the analysts are expecting them to continue to make, oh wow, it's expected to even go even more than that. So pretty cool. Pretty cool. Can you do Pinterest and Taiwan Semi? Oh, yeah, remind me to look at Taiwan Semi. You know what? Let me pull up Pinterest right here. That's a very interesting stock right here. So Pinterest, they're actually on my zero debt watch list. So every stock you see on this watch list right here has no debt whatsoever. So like DocuSign, Duolingo, and Pinterest right here is the one that I wanted to look at here. So Pinterest. This one has kind of been flat since IPO. So the same prices they were back when they IPO'd. And here's a cool stat we get here. This is their monthly active users on Pinterest. So it looks like Pinterest, wow, it grew nicely year over year. Same time last year was 522 million monthly active users. Now it's 578. So pretty good growth there. And it looks like they're finally net income positive, making net income every quarter. This was a one-time adjustment. Well, they actually made like 100 mil, but they didn't make this much money. But looks like they're making net income every quarter now, which is good news. Yeah, here's how, they're debt free. Like I said, really good balance sheet. They have $2.6 billion of cash, no debt, making now millions a quarter. So they're not bad. I think the sales are up 16%. That's good too. They're interesting. Okay, so UNH, Hogs. Which one do I look at? SoFi, Hog. Okay. Oh, what up, Tengrika said Lululemon. So Lululemon, the one thing I think it's worth looking at $200 a share, because of how buyback friendly they are. They're trading at such a low multiple. And I think this brand, they're exposed to changing consumer habits, their preferences, I should say. Let me get a sip of my Monster real quick. I wanted to look at Monster beverage stock too. They get so much free marketing. Okay, so yeah, here's their number of stores. Here's a cool stat we get. Went from 711 to 770. So they grew by 69 stores year over year. But here's one thing that investors weren't too happy with. So the sales year over year grew by 7. So sales are up by 7, but the profits year over year, the net income, if it would load here, there we go. The net income is actually down by 2% year over year. So that means they're losing their margins a bit. They're losing that pricing power. But the great news with Lululemon, and here's the one reason I really love them, is the huge buybacks they're doing. So they're making 400 million a quarter. What do they do with all that money? Buying back their own stock. So the actual net income per share was up by 2%. So although the net income was down by 2, the net income per share was up by 2.5 thanks to the buybacks. That's what I love about them. They've bought back literally 4 to 5% of all the shares that exist. So honestly, I don't honestly expect them to outperform the market in the long run, but I do think it's worth as a small position, maybe a couple percent of the portfolio. Wouldn't have it as like a top 5 position. Okay, so Prentice said SoFi stock. Yeah, man, I love SoFi. I do own SoFi. I might be biased. Hey, what up? We'll look at JMIA as well. Sorry, I try to get to all the stocks here, and I go pretty quick out of respect for everyone. So here's SoFi Technologies right here. Here's why I love them. They deserve to be $25 a share. They're a fintech. They have their own banking charter, and their financial services business is exploding. This is why they deserve the high premium valuation. A high PE company is usually most of the time justified because of how high growthy they are. And for SoFi, their financial services business is more than doubled. It's up by 105% year over year. Also, the lending business is up by 30% year over year. So their two main segments of business are growing like crazy, and people are really starting to take them serious because they're profitable. They made $100 million in net income this quarter. So sales are up by 42, monster growth, and they made $100 million in net income on that. So I like SoFi. I might be biased. I do own them, but they're pretty cool. Oh yeah, someone said SOUN. I'm gonna look at JMIA. So here's SoundHound AI. There's really one metric you want to look at here. If you own SoundHound AI, there's one thing you want to watch, and that's their subscription business. This has seen some very insane growth. The business is up 8x year over year. It used to be nothing. I mean, look how small those revenues down here were, like 400, 500,000, nothing burger. But now they have real, 32 mil, but the growth has been so real. And at this growth rate, 8xing year over year, what's it going to be the same time next year? So this is what you're heavily watching. And that's what's led to their huge beat on revenue. Analysts were expecting 32 million. They reported 42 million. So if they're going to continue to beat revenue like this, they might have a $80 million revenue quarter. Again, all this being said, I still think this one's a tough buy because of the huge losses. I mean, they're losing like 50 mil of net income a quarter, but they're really growthy. And this is the best part, is how growthy the sales have been. And you're really watching that subscription business. They also have some royalties they collect. That business, hey, it grew 8% year over year, but after falling 50%. But anyway, that's SoundHound AI. You're watching that subscription business. So let's see. Yeah, hey, we unfortunately can't cover DKNG. Every time I do, TikTok takes down the stream. Some industries I can't cover because they're not TikTok friendly, apparently. Hey, that's my best way to support me is to subscribe to my YouTube channel. I'm streaming on there as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. I'm streaming on there as well. So if you missed anything, a lot of people like to replay it. Sometimes I talk too fast, and if there's something important you missed it, you can replay it. It'll be there forever. I don't take them down after I'm done streaming. So anyway, and here's BRYN. Let's keep going. And I sell nothing, by the way. I have no course book, Discord. I'm literally just on here giving my opinion. And yo, Tengrika, thanks so much for the 25 roses. No way. Thank you so much, Tengrika. If you got another stock you want me to look at, let me know. I got you. So let's see. Here's BRYN, Bryna Technologies. They're very small. They're only worth $460 million. But let's see how they're doing. Wow. Here's why that might be worth looking into. They're very growthy. I mean, sales are small, but after growing 76%, they're up another 41%. And they're making net income on that. So that's very interesting. Here's what I love about these small caps that make net income. So you're buying a $460 million company, and the business is making a couple million every quarter. And they have a fortress balance sheet as well. It looks like no debt on this company, 13 mil of cash. So they're really growthy. They're profitable, making net income every quarter. I could see why you like BRYN. I like that one too. Out of all the $400 million market caps, that one looks very nice. Bro, you said your returns are 100% over 2 years, but you have multiple accounts. So what's your total? Oh, probably in total, I don't know. But let's see. SoFi, or wait, PIE is a great company. What up, Zachary? PIE. And hey, what is Red Cat? Give me the ticker symbol, by the way, and I can check it out for you. So this is Invesco Emerging Markets Momentum ETF. So let's just go to its top holdings here. Yeah, I've never heard of a lot of these stocks. There's Taiwan Semi. I love Taiwan Semi. But some of these other stocks I've never heard of before, but that's because they're international. So yeah, it looks like PIE is an international ETF. One international ETF that I've kind of been looking at, this is China specifically, it's CQQQ. So this is the China Technology ETF. It's really been performing so well because it doesn't have Alibaba just went up a bunch on Friday, but it doesn't have Alibaba and JD in here. I'm actually surprised PDD's in here. But yeah, this is one of my favorite Chinese. Oh, geez, I'm sorry. Okay. All right, so let's keep going here. T-Mobile stock. You know what? Let me show you that. I love T-Mobile stock. Oh yeah, then we gotta look at Monster Energy. I wanted to do that one. Hey, what up, I Air Ronnie said, what makes Duolingo look attractive? Man, the valuation and the growth. I'll pull up Duolingo in a second here. T-Mobile, yeah. So T-Mobile is one of the stocks Warren Buffett just completely sold out of T-Mobile, and it doesn't bother me. So Warren Buffett no longer owns T-Mobile. Here's what I love about this stock, and again, as you saw, I do own 7 shares of them, so I might be biased, but I like them more than AT&T and Verizon. So they're trading at 23 times net income. That's not, that expensive, I feel like they could stretch up to like a 25 PE or something. Their postpaid phone revenue. Has anyone heard of Mint Mobile? Their Mint Mobile Ryan Reynolds ads are genius. But one of the best parts about T-Mobile has been their margin expansion. So the sales are up by 6% year over year. But look at this net income. They're making these net income growth rates year over year specifically. They're having so much net margin expansion. So if we go to their margin, they now have like 15% net margins. If we zoom out to last year, in 2021, this was single digit margin business. After they won their lawsuit against T-Mobile or against AT&T, T-Mobile gets permanent access to AT&T's bands. And here's the best part about T-Mobile. What are they doing with basically 3 billion plus a net income every quarter? Here's what they're doing with that. They're literally spending it all on share buybacks. They spent 2.5 billion on share buybacks this quarter, 2.5 billion this quarter, 5 bill this quarter. So here's what it does for you as a shareholder. This is the best part. Net income grew by 10% year over year, but net income per share, is up by 14% year over year. So you literally own 4% more of the company, as well as getting a 1.3% dividend. They're so shareholder friendly company, and they have so much stock price appreciation because they have leftover money to reinvest in the business. They're not eaten up by a lot of debt like Verizon and AT&T. So yeah. All right. We gotta. Okay, so let's look at Monster Energy now. MNST. So here's Monster Beverage. This company, man, has had some pretty monster performance. I mean, just for selling beverages. Coca-Cola is the largest shareholder. Did y'all know that actually? If we go to shareholders right here, Coca-Cola owns 21% of all the shares. And they also have a really good balance sheet. Basically, no net debt on them either. But yeah, Monster Beverage makes pretty much a 500 million of net income every quarter. Sales are up by 11% year over year. They made 500 mil this quarter, 440 mil last quarter. And I'm drinking a Monster Beverage right now. This one is I can't see because it's so dark in here. It's like fruit punch flavor, but I can't see. Oh, Pipeline Punch. Okay, cool. I haven't had a Monster in a very long time. But yeah, I do like that. Oh, I forgot to show the best part about Monsters, the share buybacks they're doing. So MNST, what site is this? Yeah, hey, thanks. Yeah, hey, I'm on a brokerage right here. It's where you buy stocks. It's in the link tree in my bio. It's the very first link there. Here's how you can tell if they're doing buybacks. So the net income is up by 14.9, but the net income per share, this is the crazy part, is up by 21.1. They bought back literally, I can't believe it, like 6-7% of all the shares that exist in the past year. A lot of beverage companies did, like Coca-Cola as well. They bought back like 8% of all the shares. Coca-Cola Consolidated right here actually bottles for Monster. So this company right here bottles for Monster Beverage. And another company, like, check this out. Net income is up by 8% year over year, but net income per share is up by 16. I love buyback companies. Like, you literally own a couple percent, like more of the company than you did a year ago. And that forces the EPS to go up. It makes the multiple go down. It's just great news. All right, so someone said BUL. What up, Wander? Is Bull going to 50? Oh, and RCAT. We got to look at RCAT too. So this is Webull right here. This is that. I do own this I don't own this stock, but I do use their brokerage. So I've probably given them a lot of transaction fees. So it's literally just this app right here, Webull. It's just this brokerage, publicly traded. And here's their stock right here. So they reported earnings on Friday. It was a mixed bag. There was some good and bad news. Here they had good guidance, but here was the good news. The sales grew by 46% year over year. That's some good growth. So the revenue is up by 46% year over year. The bad news is they did lose net income. Like the past 2 quarters, we saw a nice trend. They made 10 million each quarter, but now they lost 30 million this quarter. So, brokerages have really high margins. You look at Interactive Brokers, Robinhood, Moomoo, all these have like 40, 50% net margins. but Bull is still growing there. But that's mainly from crypto transaction fees. If we go to Webull right here, they don't actually, or literally the past week, they started offering crypto. So I think that's going to be a good growth factor in the future there. The fact that they're finally doing crypto on their app now. That'll bring that's where you get a lot of high margin transaction fees. So I think the future is interesting on that one. Um, oh yeah, wait, let's look at RCAT. So this is a drone company, and to be honest with you, they're not great. Or let me just reanalyze them actually. So they're only worth $890 million. So they don't have too much of a market cap, but let's see how they're doing. Like, check this out. This is kind of the unfortunate part. Like, if you want to buy a drone company, like I would have to look at all the best drone companies out there, but I don't know if this is really the best one for that exposure. I mean, the sales are down 19% year over year, so they lost their growth and they're burning through quite a bit of money. They're $800 million company. Actually, these aren't too terrible of losses, but anyway, I just don't love that the growth is negative on this one. We're actually, look at that. Oh wow! Actually, if this is right, please listen to this. The analysts are expecting the revenue to go to 25 mil and then 44 mil. The next 2 quarters, so if you're in RCAT, the next 6 months are going to be super critical to see if they meet these expectations. Because if they do, the valuation might be justified if they really go to 50 mil of revenue. So the next 2 quarters look crucial for RCAT to see if they meet those expectations for growth. I got stuck at 12 for, hey, what up, James? Okay, Lauren said, REZI. So REZI stock. What is this one? Can you do COF or yeah? Hey, remind me to look at COF. That's Capital One. I think after the merger, that one's a good one. So here's REZI. This one's pretty much at an all-time high. So yeah, congrats if you own this one. You got to be up on your position. Let's see what they do. So ADI Global Distribution. Yeah, that's grown very nicely. This business is up 33% year over year. Very nice. And the products and solutions is up 5% year over year. So that was a huge beat. If you're ever wondering, like, why did this, what'd I just do? If you're ever wondering why a stock like gapped up on earnings, it's usually because they beat the analyst expectations like crazy. So yeah, when we go back here, this was a huge beat on revenue. They missed on net income. So yeah, this must have been some one-time adjustment because the EBITDA beat by a huge margin. So yeah, sales are up by 22. The operating profit's up by 34. If we look at the net income, we don't really look at that because it was a one-time adjustment. You really want to look at the operating profit, and we can see that, yeah, it grew 34% year over year. So pretty nice. That's why that one's at all-time highs. And a normal company, if they had this kind of net income loss, they wouldn't go up so much, but it was some sort of one-time adjustment. Maybe they did an acquisition or something. I don't know. Anywho, I can see why they're doing so good. So yeah, let's do COF right here. Capital One Financial, after their merger with Discovery, wow, they're already at all-time highs. I thought like this one's just going to continue to grind up higher, I believe. So let's see. The business, of course, the sales are expected to skyrocket up from the merger. But yeah, the net income, yeah, this is from the merger thing, so you don't have to worry about that loss. The future is just really bright with this company after the merger. It was a synergistic acquisition or merger, really. Yeah, what's the yield here? And you get a 1% plus dividend on this company. Nice. It won't. Yeah, the multiple, it says 600. It's not really. It's way lower than that. So anyway, I wish I gave you more thoughts on them, but nice. All right, so let's see. Thoughts. What's the ticker? Hey, I don't know. REZI, I think. Yeah, hey, if you missed anything, I'm streaming on YouTube. You can replay it. A lot of people like to watch the stream from YouTube because I talk too fast sometimes. By the way, my YouTube channel is called Nathan Robert. You can just type that into YouTube, or it's in the link tree in my bio. It's my only other account. Yeah, watch out for people impersonating me. I'll never follow you or DM you or anything. Can you tell me some of your long-term picks? Yeah, so actually it's this whole portfolio. So if you look in the top right here, this is called my buy and hold portfolio. So basically once I buy a stock in here, I try to just never sell it. I try and just hold it on for the long run. And these are all the companies that I've picked so far that I'm probably going to never sell. So someone said, can we look at Coca-Cola? So I don't know if you're talking, this is not the Coca-Cola that you know. This is Coca-Cola Consolidated, but I will cover the main Coca-Cola for you. That's actually a huge Buffett play. So if we go to the Warren Buffett portfolio right here, 9.19% of his entire portfolio is in Coca-Cola. It makes him a boatload of dividends. This company has performed a lot better than a lot of the food stocks. Like you look at Hershey's, you look at Pepsi, a lot of these other stocks like Coca-Cola have not performed as well as they have. And check out the yield here. This is probably the best part. You get a 2.9% dividend. So basically a 3% dividend yield. They raise it every year. Net income's pretty good, 2 to 3 billion in net income a quarter. And I don't really expect this one to outperform in the long run. Sales are only up by 1%, but it's just a safe, reliable, steady business where you should just get like 6-7% of your money back a year on average. What happens? Yeah, hey Chris, anyone? This is if you want to get this app right here, it's a brokerage right here where you buy stocks and stuff. It's in the link tree in my bio. It's that very first link there. It's an affiliate link, full disclosure, so we'll both get some free stocks if you sign up, so it'd help me out. But or you can just type it into Google, just a brokerage called Moomoo. So yeah, here, let's do another one here. Yo, Wander, we just looked at Bull. I did cover Bull when you first asked. I'm interested. Oh, hey, yo, 5 a.m. club. Yo, what up, J.I.? He says it's 5 a.m. for him. Yo, what's up, man? It is 1 p.m. here in America. So Sam said, can you do ACGL stocks? So this is Arch Capital. Wow, they've done very well. So let's see how they're doing financially. So they're in an insurance business. So check that out. 57% of the revenue comes from insurance. And then they're also in reinsurance. Let's just go to their total revenue. So that's really good growth. The revenue is up 23% after growing 33% at the same time last year. And they're making a lot of money. I mean, it did fall year over year, but still, these are huge numbers. A bill this quarter, 600 mil bill. So if you average it out, they're pretty much making $1 billion of net income every quarter. They don't pay a dividend, but yeah, they're trading at 9 times net income. That's fair. That's actually a little low for the insurance sector. So yeah. That's a cool insurance company. I wonder if they're like, what do they do? Like property and casualty insurance or corporate underwriting? Oh yeah, so specialty lending products. Anyway, that's interesting. All right. Thanks for the update. Yeah, what up, Halo? No problem. Do you know there's someone impersonating you? Yeah, lazy. Yeah, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. I have no course book. I'll never know WhatsApp. I'll never DM you or ask you for anything. Buy some Ethan. What's up, man? Yeah, Ethereum. MYSZ stock. So this is my size. So again, we don't really cover these kind of companies. Yeah. So if you look in the top right here, I would maybe cut my losses on this one. I probably just never would have bought them in the first place, but there's a lot of stocks that I should have never bought in the first place too. So check this out. In the top right here, the whole company's worth $3.7 million. So extremely small company. Like it's one I can't even touch. Do they have sales? They do. So they did $2 million of revenue, up by 1% year over year, and they lost $450,000. So when you're only worth, the whole company's worth, $3 million, losing $450,000 is bad. Losing $1 million is really bad. So there might be some real bankruptcy risk here. Maybe if you sell it now, that'd be the right thing to do. But there's probably going to be some weird momentum moment where it like goes up by 30% in a day. But it's okay to miss out on that because it'll eventually probably just go to all-time lows. So yeah. What is 6-7? Is that a stock right there, Devin? What's the ticker symbol for that stock? I don't know what that is. So, what's CMBT? What's this one? CMBT Camtech. Huh. So this one looks interesting. SCA. Oh yeah, well look at SCHW. That's a Charles Schwab ETF. So this stock unfortunately has not done too good. It's the same price that it was back in 2011 actually. So if you bought the stock in 2011, it's the same price today. And I don't know what any of this stuff is. All the revenue comes from Belgium. So just beware, this is not an American company. They're headquartered in Belgium. And I can actually see why the stock hasn't done too good. So check this out. Well, wait, look at that. The sales grew by 53% year over year. but the profits tanked. The profits fell by 51. The actual net income went negative this quarter. The reason the sales probably grew is they did some sort of merger or acquisition. Yeah, that's how you can tell the cash from investing activities. They spent basically $1.6 billion buying a company. That's uh that's why the sales went up by 53%. But maybe this was a merger acquisition. I don't know, but I'd be so careful with that one. Okay. Um, Hey, SEHW, and no way. What up, Looney? Good to see you, brother. Happy Sunday. So here's SEHW. Oh, this is just Charles Schwab. Okay, so yeah, they own a bunch of like the ETFs, for example. If you own SEHD or something, uh, that little expense ratio fee you pay goes back to this stock right here. So let's see how they're doing. Active accounts, they got 37.5 million accounts. Their client assets are at, geez, what was that, 11 trillion? 10.76 trillion. Their daily active trades are at 7.5 mil. So yeah, investor services, that business is up by 25% year over year. So investor services is growing. Advisory services is also up by 25% year over year. So both segments of business are growing like crazy. And yeah, they're making a lot of net income every quarter. Look at these year-over-year growth rates, ridiculous. It's up 59%. So they're going to be making over $2 billion in net income a quarter. That's probably why the stock's at all-time highs. That net income growth is so impressive. So yeah, that's Charles Schwab. What app are you using? Yeah, hey, Obi, it's in the link tree in my bio, very first link there. It's actually a brokerage where you buy stocks. It's a brokerage called Moomoo. So yeah. So hey, what up, Looney, one of the members here. What's up, brother? He said HOG stock. So yeah, Harley Davidson. If you've heard of those motorcycles before, I think this stock is not worth buying. Unfortunately, they lost. Maybe this is priced into the stock already, but they kind of lost their growth. If we go to the total revenue right here, the revenue is actually down by 19% year over year. So the sales are down by 19%, and the net income is down by 50%. So the margins fell even more. I think it's just a tough buy. I mean, this was a real net income loss quarter as well. So I wonder, what are the analysts expect? Actually, the analysts are expecting things to be all right. So I nothing's really blowing me away here to want to get exposure to an automotive stock. I mean, hey, look at that though. A 2.5% yield, only a 20% payout ratio. That's based off the last full year though. Anyway, I would, they're trading at 14 times net income. Might even be lower. It's a mixed bag there. It's a mixed bag on that company. They might be like a Ford. So S&T stocks. So Senstar Technologies, huh? So another very small one, $105 million company. So where's the revenue come from? Most revenue comes from North America. Actually, these numbers look good so far. So the sales are up by 16% year over year, but again, the sales are only 9 million. But check this out: out of the 9 million of revenue, 1 million of it was net income. So they're actually profitable with 12% plus margins. So that's something very interesting about this stock. They have no debt or no net debt. They're making net income every quarter. They're very small though. Again, only $100 million, but that's pretty reasonable. Out of all the $100 million companies out there, I like this one because they're actually profitable, really good balance sheet. Nice. Okay, so audio says DE. So I love DE. In my opinion, this stock is undervalued by 30 to 40%. It could take a year or two to get there, but in my opinion, not financial advice here, buy this in a Roth IRA, buy it in a set it and forget it account. Maybe it's 5% of the portfolio or something. John Deere is a great agriculture inflation or basically agricultural commodity inflation exposure play. I love John Deere, and they're still at a reasonable valuation even after the huge decline of sales, as I'm about to show you. They're trading at 25 times net income. So they're trading at, not a crazy overvalued price. And they're trading at this valuation despite, the net income falling by 26% year over year. We really expect this to rebound in the future, but they're still printing well over $1 billion of net income every single quarter. And we expect the growth to come back soon. So I think John Deere is a good, just never sell stock. Okay. Can we look at MRVL and tell me why it took such a hit? So yeah, Marvel Technologies, this is like the cheapest chip play out there. They're trading at legit like 22 times forward net income. So very low valuation on this company. Um, what did they do? So they it was a slight miss. So they missed on revenue, they missed on net income, and they missed on EBIT. So they triple missed just very slightly, like less than 5%. But here's why I think this one's worth looking into. Like the sales still grew like crazy. The sales were up by 57% year over year. They made 200 mil of net income. This used to be a tough buy. They used to lose a couple hundred mil a quarter. Now they're actually making 200 mil a quarter. And analysts are expecting them to continue. The net income next quarter is legit expected to be a billion. Like it's gonna be crazy. So next quarter will be important. I think the stock fell though because of their guidance. I think they had some like lower guidance than expected. But I think that one's worth looking into. All right. So what up, Young? Someone said AutoZone. Hey, AutoZone. This is a huge buyback company. So a lot of people, even in a recession, you get a flat tire, you need an oil change or whatever. People still got to get their car fixed in a recession, or else you basically just don't have a car, right? So this stock is at an all-time high, and there's such a boring business. Like these boring businesses make so much money. Like the sales are growing single digits every year. But basically, the reason the stock has gone up so much is because of how much money they're spending on buybacks. They literally have a rule where like 50 to 60% of all the net income they make is returned to the shareholder just through share buybacks. They don't pay a dividend. What they do is they buy back their own stock like crazy. So there's way, way, way less shares that exist, giving you more ownership in the company, making the multiple go down. So AutoZone, I wouldn't buy the one at all-time highs, but I wouldn't be shocked to just see them continue to grind up higher like they always do. TSM let's look at Nvidia right here. Nvidia, they reported earnings last week. The earnings were good. What up, Ranger John? Thanks for the roses. I appreciate that, John. So here's Nvidia stock right here. Here's what's so cool about them. Obviously, we know they have a huge GPU market share, a 20% PC GPU market share. They have this automotive business. Lucid uses NVIDIA's automotive software. A lot of the revenue comes from data centers. 80% of it comes from data centers. Data centers need GPUs, and NVIDIA makes them themselves. So that's genius for them to get into the industry. Their earnings, they beat on revenue, they beat on net income by a nice bit, and they beat on EBIT. So it was a triple beat quarter. This is ridiculous. The sales grew another 55% after more than doubling the last quarter. So sales are up by 55, net income's up by 59, a record net income quarter, 26 billion of net income. Ridiculous. They're also doing some share buybacks, fortress balance sheet. Cash flow is really good as well. So Nvidia is like a great, just never sell stock, in my opinion. It's tough though. I personally own AMD over Nvidia. Nvidia has definitely outperformed AMD, but yeah, I have 11 shares of AMD. We're up 30% on them. We didn't even time the bottom on AMD. And during April, the bottom was $76. We bought this one at $125, and we're still doing very well. So thank you, AMD. And just that whole sector. So Sam said J&J. Oh, then we can look at Palantir. Palantir is a cool one. Chipotle too. What up, Jesse? Yeah, we'll look at Palantir as well. If y'all are enjoying, by the way, best way to support me, just hit the like button, hit the subscribe. We stream every single day. We stream every single Sunday at this exact same time. So hey, if you're free every Sunday at this time, I stream every Sunday, and we're doing another live stream later tonight. So anyway, here's Johnson, and I sell nothing. I have no course book, Discord, WhatsApp, Telegram. I sell nothing. Watch out for people impersonating me. So here's Johnson & Johnson. This is a great dividend growth play. I don't expect this one to outperform the S&P in the long run, but it's just good safety defensive stock. Healthcare play, you get a 3% yield, and the yield is completely sustainable. We're seeing a lot of growth from the Shockwave acquisition that beat expectations. Like, check that out. This was a nice beat on revenue. They beat on revenue, they beat on net income, and they beat on EBIT. So it was a triple beat quarter for Johnson & Johnson. They own so many brands that are worth over $1 billion. What's the whole company worth? Yeah, this is a $420 billion company, and they're only trading at 19 times net income. Probably just because the sector and some of their lawsuit payouts. But Johnson & Johnson's a good one to just buy and never sell. It's a safe one. A lot of the older investors love them just because they're safe. You don't really worry. Like if the tech falls, they might be up or something. Uh, so let's see. Do you think Palantir is overvalued? I do think Palantir is overvalued, but they might deserve to be overvalued because of how growthy they are. I'd love to own Palantir, but just at a significant, or at a bit of a lower valuation than today. Here's why they might deserve. Like, look at this. They're trading at 108 times sales, so they're not trading at 108 times net income, 108 times revenue. But here's why they might deserve this high valuation. I personally not paying it. I'll wait for a little lower price, but check out the government revenue growth. A lot of police stations are using their software, and this business is up by 50% year over year, literally to a new record. This government business is booming, and not just the government business, which is over half the revenue, but also the commercial side. With S&P 500 companies, a lot of S&P 500 companies use Palantir. A lot of like mom and pop shops use Palantir software, and this business grew 46%. So they're just incredibly growthy. They just had their first ever $1 billion revenue quarter. They had exactly $1 billion of revenue, up 48% year over year. And on that billion, they made 330 mil of net income. So they just had the record margin, 33% net margin, absolute fortress of a balance sheet. They have no debt at all, completely debt free, and they have $6 billion of cash, up from $4 billion of cash. So Palantir is just a beast. I'd love to own them. They're everything investors want. I just want a lower valuation. So Jesse said Chipotle. Yo, let's do it. Would you rather buy Google or Microsoft? Probably. That's a good question. The answer is both. But we'll look at that later. So we'll look at Google next. Here's Chipotle stock. Chipotle's been struggling just because they reported slowing growth and the multiple had to come down. So before today, Chipotle literally traded at 50 times net income. And it's okay to have a high valuation as long as you're high growth, but Chipotle had some slowing growth. Like if we just look at the total sales year over year, total sales revenue, lifeblood of the business, only grew by 3%. And, they're still trading expensive. Right now, they're still trading at 37 times net income. Back here, they were trading at 55 times net income. They're still trading at 37 times net income, which is expensive. That's why I think they fell so much with the slow sales. So the sales are only up by 3, and the net income, they lost their margins too. Sales are up by 3, but the profits are down by 4%. So that means the margin fell by 7%. But still, they're printing money. They're doing buybacks. They're making 400 mil in net income a quarter. So they have so much leftover money. So they bought back over 1% of all the company. They'll probably do more buybacks. But I think that one's worth looking into. But I think maybe they'll fall a bit more before they go up a bunch. So Audios, what's up, brother? He said APTV. Sean said I got NVIDIA puts. Yo, good luck with that, man. I could see why you do that, though. They're at all-time highs pretty much, and sentiment's not in their favor. So here's Aptiv PLC. So this might be an international company. They might be related to energy because this stock is the same price that it was back in 2017. So they haven't really done much for a while, but let's go look at their financials. They don't pay a dividend anymore. They trade at 18 times net income. And they are related to energy. So electrical distribution systems, engineered components, and advanced safety. How's that doing? It's down by 3%. What are the total sales doing? So the total sales are up by 3% year over year. Single digits, at least it's growing. Sales are up by 3. Net income fell by 57 though. Was that real? So pretty much they're making 300 to 400 mil in net income a quarter. Nothing's really blowing me away here, to be honest with you. It looks like the business is barely growing. But at the end of the day, they're still making a couple hundred mil of net income a quarter, which is good. But these sales growth aren't great. Only 3% growth year over year. But they're interesting. So let's go over Google, man. I do own Google, by the way. I might be biased. Here, I'll show you my position in them. So I own 19 shares of Google, and Google's been an insane performer, like sleepy performer. Like they're at an all-time high. On Friday, they literally closed at an all-time high. So if you've ever bought Google, you can't be down on your position. You're for sure up on your money. They have the best assets. They literally own YouTube. They own the Google Search. They have the Google Cloud. Check out just the Google Cloud business. They're in cybersecurity with the Wiz acquisition. They own Waymo. They're in quantum chips. They own their own TPUs. And look at this. The Google Cloud business grew 31% year over year. And Meta just signed a $10 billion cloud deal. Where this literally just happened, where Meta is spending well over $1 billion a year for the next 6 years with Google. I wonder if it'll show this. Dang, it's already too long ago. But also, Apple explores using Gemini for Siri, which would be pretty interesting. So anyway, Google is just such a great company. Sales are up by 13, but net income is up by 19. So they have pricing power. They're growing their margins, and Google also has the largest buyback program of any stock on the planet. Like, what is Google doing with $28 billion of net income just this quarter? Well, first off, their dividend only costs 2.54 billion. So they have a very low dividend payout ratio, so much room to raise the dividend. Like, Google's a secret dividend play. I believe in 5-10 years from now, they could afford right now to triple 4x their dividend. They just choose not to. But they're mainly returning money to you via share buybacks. That's why the very low dividend yield is made up for by the share buybacks. They're literally spending 15 billion of net income a quarter, which arguably, or for surely, share buybacks are a better use of capital allocation than dividends, because it's a tax-free return to you as a shareholder. It's basically a tax-free dividend, basically a tax-free non-cash dividend, or you choose to pay the tax when you sell the stock. Anyway, I love Google, bro. Perfect buy, never sell stock. And I think they might continue to hit new all-time highs. Mag 7 company, they're at an all-time high, and they're only trading at 22 times net income. I feel like they could stretch up to like a 24, 25 PE before it really gets overvalued. So yeah. Do you have high yields? I have 2 high-yielding stocks, so I'll be really quick about this. My highest yielding stock is actually MAIN. It's in my Roth IRA, Main Street Capital. They're actually one of the few companies that pay monthly dividends. So this company has a 4.5% dividend. If you look at the very top there, 4.5% dividend yield and monthly dividends. And they also have a technically higher dividend yield than that because of all the special dividends they've been doing. I keep waiting for an NVTS, but I'm starting to lose patience. Can you give me your... Yeah, I honestly, I would just not buy... Wait, NVTS, I think that's Navitas Semiconductor. Honestly, man, I would just stay away from this one. Like, I don't see any value in this one besides the NVIDIA partnership, and I don't see, I don't really see much hope for that. Yeah, honestly, I just wouldn't buy that stock, to be honest with you. I'll give you more thoughts on that one if you want, but someone said what's up? International Space Station said AVAV stock. So yeah, this is Aero Environment. This one has had a lot of growth. HIMS, please. Yeah, hey, what up, Bruno? We'll look at HIMS as well. Don't worry. What app is this? Yeah, hey, yo, bro. This is a brokerage right here. It's in the link tree in my bio, the very first link there. It's where you buy stocks. Link tree and bio, first link there. But here is AVAV Aero Environment. They make loitering machines. So check this out. This business, for some reason, is booming. They're reporting fiscal year. I don't like when companies do that, but still, the most recent quarter revenue was up. Over the first over $100 billion quarter, and it was up 87% year over year. Sorry, I'm fumbling my words here. I need another sip of this monster. So for some reason, their loitering munitions machines have been growing like crazy. Let's just see how the business is doing. So the total sales are up by 39%, and they made profit on that. So yeah, they made net income this quarter, 16 million of net income. And look, the growth is expected to keep on climbing up. This was a great quarter. Next quarter is expected to be even way higher and then continue that growth. So AVAV is pretty interesting, a niche stock right there. What flavor of Monster are you drinking? Yeah, hey, this one I just grabbed it at the gas station. At the gas station, it was a 2 for $5 deal, so I grabbed 2 Monsters. This one's called Pipeline Punch. Okay, hi, hey, what up, Vinar? What are you doing? Hey, we're looking at stocks, analyzing stocks. So someone said HIMS. This is a healthcare play. One reason the stock has been struggling right now is because they lost their partnership with Ozempic, with NVO, with Novo Nordisk. So this company used to sell a weight loss prescription, a GLP-1 prescription. I'm going to say that instead of the real word, but that led to a lot of the growth. A lot of the growth of the sales has been from selling their weight loss prescription. Now they no longer sell it on their website. So the future growth of the sales is gone down a bit. So that is being priced into the stock right now. But for right now, the business is booming, growing very nicely. The sales are up by 72% year over year. So that's very good growth, after growing 77% the previous year. So insane growth of the sales, and not just the sales, but the actual profits here. Like they made 43 mil of net income this quarter. They're going to be making over 200 million of net income a quarter. Sales are up by 72. Also, if you're wondering what happened to the balance sheet, this is no big deal. The assets went up with the liabilities. Basically, they issued $1 billion of debt to get $1 billion of cash. So look at their cash on hand. It went from 273 mil to 1.12 billion. We suspect that they're going to do some sort of capital allocation with this. Like they're going to buy a business maybe, or reinvest back into their own business a huge amount of that money. Just try and make up for that growth. But they're in an interesting spot, and that one's worth putting on the watch list. You still got to be aware of that. They no longer sell that GLP-1. Pipeline Punch is the best flavor Monster. Really? You've had this one before? I've never had it, and it's delicious. I don't like, this is the part I don't like. How many grams of sugar? 38 grams of added sugar. Actually, that's not too bad, but it's 78% of your daily sugars. Okay, sorry. Okay, LEU. What is that? That's that energy company. What's up, Rivian? Rivian Millionaire. Hey, do you got Rivian stock? I own some Rivian through Amazon. And yeah, hey, R Yeezy. This is a brokerage. If you want to get it, it's in the link tree in my bio. That very first link there. R Yeezy. Yeah, no problem, yo, bro. Orange Cream Monsters Fire. Hey, what up, Corey? Yo, we could look at Monster stock again. Dude, Monster stock bought back 8% of all the shares in the past year. It's ridiculous. So they're a pretty cool company. So here's LE, and they get so much free advertising from social media. But yeah, this is a uranium play right here. So yeah, 85% of the revenue comes from their low enriched uranium, that yellow cake uranium. And they also have their technical support solutions. That business is up 48%. I mean, it's only 18% of the business, but it's cool to see that little business is growing a bit. And they are making net income every quarter. So that's kind of some more good news. They're making net income every quarter. A lot of these other uranium plays are profitless. Or yeah, they're not really making any real profits right now. So there's also, if you want a uranium play, ticker symbol URA, the Global X Uranium ETF is kind of the whole sector here. My favorite uranium play would be that stock we just looked at, and CCO, Cameco, because really the U.S. is starting to source our uranium no longer from Russia. So we're getting it from Canada and local sources instead of Russia. And, uranium power is what powers nuclear reactors. So all nuclear reactors do is, split the atoms, and it just generates a bunch of heat and steam. Nuclear reactors, the whole point is it's just a heat to heat up water, and it's just a steam engine pretty much. So anyway, UPS stock. So, Eunice, what's up, man? He said GTLB. So this is GitLab. There's this business, for some reason, it's just like, I don't know. So they have an earnings preview. So they're about to report earnings. There's good news and bad news. So the good news about this company is they're growing very nicely. Like they're growing double digits every year. I still don't know too much about what this company does. I always thought this was GitHub for the longest time, but this is GitLab. I don't know what they do actually, but the sales are growing nicely. The sales, after growing 33%, grew 26% again. And they're narrowing their net income losses. So they lost 34% less money than the same time last year. They are still losing money every single quarter, but I think they're making money from their interest on hand. Let me see if that's the case. How are they making that money? Wow, hold the phone. They're legit making 10 million of positive interest a quarter. So that's actually really interesting. Okay, anyway, that's GitLab. I wish I'd give you more thoughts on them. White Monster is Yeah, White Monster has no sugar in it. You're right. FLUT or DHR. Yeah, this is DR Horton. No, never mind. That must be DRH. So here's DHR. This is Donna here. I forget what they do. They might be related to agriculture, or let me see. No. So diagnostics, biotechnology, and life sciences. So how's diagnostics business? So that's up 2%. Biotechnology is up by 8%. In all, the revenue should be up by 4% if I had to guess. So yeah, 3.36%. And they're making net income every quarter. So that's good news. They're making close to $1 billion in net income every quarter. This most recent quarter, though, the margins did fall a bit. Actually, that might be why the stock is kind of struggling from their all-time high level. They're losing the margins. So sales are up by 3, but net income is down by 38. And this wasn't some one-time adjustment. That was real. So we do got to watch this margin number. Margins fell by 40% year over year. good to watch, but they're still printing money. I mean, nearly a billion a quarter, except for the most recent quarter. What's the multiple? So a 43 times net income. Yeah, that's a bit of a high valuation for one that's growing single digits. So yeah, yeah, it's sarcasm. No one has made a million with Rivian. I know, man. I lost on Rivian. Actually, I bought Rivian right at their IPO. Actually, I wonder if I can pull that up. Actually, no one cares though. Actually, I own Rivian stock through Amazon. So Amazon actually is the largest. Look at that, bro. I bought Rivian the day it IPO'd, and I sold it like a few days after. Um, can't This was one of the worst IPOs ever. I mean, it was crazy hype. It went to 150 bucks, and now it's at 13. Anyway, and look at this. If we go to Rivian again, if we go to the largest shareholder, Amazon.com, or Amazon is the largest shareholder. Then Porsche owns 12% of the shares, so they're being backed by some big people. Okay, CEG has the 3 Mile Island deal with Microsoft. You're right, dude. That's what I love about CEG. I mean, and that's supposed to get regulatory approval sooner than expected. CEG is, in my opinion, the best way to get exposure to nuclear energy, nuclear reactors. CEG owns 50% of all the U.S. nuclear reactor fleet. They're about to acquire Calpine, which is instantly accretive, $2 of your PS and over $2 of yearly EPS and $2 billion of yearly free cash flow for the company. It's just incredible. Let's see here. AMD stock. Yo, let's do it. Can you take a peek and share your thoughts on USAR? What up, Daniel? Yeah, don't worry. We will get to USAR after this for sure. I wanted to pull up AMD real quick. Oh, hey, we were just looking at them. So yeah, by the way, I do own AMD. I might be biased. We didn't even time the bottom on this one. Bottom was 78 bucks. We bought in at 125 a share, and we're still doing pretty good. So AMD, I've been happy. They're no longer advanced money destroyer. So everyone in the stream used to say that every day a long time ago. So check this out. They have a huge market share for GPUs, obviously, a 17% PC GPU market share. That's where this client and gaming revenue is. And the client and gaming business grew 69% year over year. So that was some pretty good, nice growth. And another huge growth factor of AMD has been the data center business because, as you know, data centers need GPUs. AMD makes their own GPUs, and there's a lot of benefits and synergies in that. And it's done wonders for their numbers. I mean, 1.7 billion of free cash flow just this quarter, up 4x year over year. The net income increased by over 3x, went from 265 to 900 mil. They have a monster balance sheet, no net debt, $6 billion of cash. So everything about AMD is growing, which I do like. AMD is about like a year or two behind NVIDIA in terms of like technology, but AMD's been trying to catch up, but I own them. I think, the thing for NVIDIA is, I'll be super quick about this. AMD, if you look in the top right, they're worth $263 billion. So for you to 2x your money, they have to go to 600 billion, which is possible. But for NVIDIA, if you buy NVIDIA right now, they're worth 4.25 trillion. They'd have to go to an 8.6 trillion dollar market cap for you to double your money. So that's why a lot of people don't, and me specifically, I don't have these as my main positions. Like, you need exposure to these stocks, by the way. You need to own Microsoft, Apple, or at least some of these, Meta, Amazon, Google. It's worth owning these, but not as your main positions. Like, check that out. I got 13 shares of Amazon. In my two smallest holdings in here, Meta and Google are my two smallest holdings in here. You got to have exposure to them, but I wouldn't have them as your main holdings. I love them though. Just from that, it's the law of large numbers. How it's just so tough to double $4 trillion. Okay, let's keep going here. So, can you check at USAR? Is that United States Army thing? No, this is USA Rare Earth. So, a $1.45 billion company. I wonder if this stock is like a smaller MP Materials. So yeah, they're a revenue-less company. So if we look at their revenue right here, it says no data because they've never sold anything, never sold a product or a service. So, and it looks like they have a lot of liabilities. So I wish I could give you more thoughts on this one, but they have no sales right now. Domestic supplier of rare earth magnets, but they have no sales. Maybe they own some mines, but for right now, I want to see this company finally start to make some revenue before I can really judge them. But so I do apologize. I wish I gave you more thoughts on them. So H said UPS stock, and then we can look at TECX. What up, Loy Boom? Yeah, sorry if I don't get to all the stocks. I do try and get to all of them. Yeah, honestly, I'd rather go with like an MP Materials maybe than that rare earth company. Um, just from judging them from a financial point of view. I mean, it's always tough buying a company with no revenue to really trust them. So, but whenever they do start making money, the stock usually starts to go up tremendously. But here's UPS right here. Here's a company I think might be a dividend trap. Yeah, I do need to charge my phone. Geez, I didn't even realize we're on 9%. We're good though. Yeah, dang, my phone might start lagging from that. So I might go grab my charger. But anyway, here's UPS right here. This stock has been struggling hard, and because they might be a dividend trap. And here's how we can just look for ourselves to tell if they are. So they have a 7.5% dividend yield. That's an insane yield if it was sustainable. And we can see their actual average daily parcel volume fell by nearly 2 million year over year. So, probably increased competition from Amazon, but the sales of the business didn't grow. So the actual sales fell by 2%. But here's kind of the worst part. This net income number, they made 1.28 billion of net income. It was a little less last quarter, 1.2 billion. And that actually was not able to afford the dividend. Because if we go to and see how, I like going to the cash flow statement, we can just see numbers for ourselves. How much does the dividend actually cost every quarter? Well, they need to at least make 1.35 billion of net income a quarter just to afford the dividend. And to be honest with you, I need a company to make, or I need them to make a good amount more than 1.35 billion so they have leftover money. I mean, all their over 100% of their money these past 2 quarters have been getting eaten up to the dividends. They have no leftover cash to, reinvest in the business, do M&A. So they have to, if they ever want to, they have to raise debt. So they're in a bit of a pickle right now with that dividend payout ratio. They still make a bunch of money, but that dividend payout ratio is a bit rough. Hey, no problem, Daniel. I'm off. Have a great rest of your stream. Yeah, hey, have a great rest of your Sunday. Before you go, if you wanted to follow or hit the subscribe button, we stream every single Sunday at this exact same time. If you're ever free, yeah. Anyway, we stream every single day, but Sundays are our best days. I usually do 2 streams on Sunday. We'll be streaming later tonight. So let's take a look at TECX. What's up, Loy? Let's do it. So, hey, what up, Jack FX? How's it going, man? So this is a $470 million company, so a pretty small market cap, a 477 mil company. They're the same price as they were back in 2021. So, and they're a revenue-less company. So that's why it says 0 right here. So if we go to the revenue, it says no data because they've never sold anything. So that's one thing, it's really tough to buy, and they're losing a bunch of money every quarter. Luckily, they can afford these net income losses because it looks like they have, $287 million of cash. And here's how we can see if they diluted you to get that money. Yeah, so last quarter, they diluted the shareholder by 180 million to raise that cash, but, I don't blame them. So to be honest with you, revenue-less company, they have a lot of cash on hand, but I want to see them finally start to make some sales. So what up, Jim? He said, look at ALT. Can you check NVIDIA? Are they buying back shares? How do you find it? Yeah, we'll look at share buy. NVIDIA spent about 11 billion on buybacks this quarter. You can see the buybacks in the cash flow statement. It is in the cash flow statement. Yep. You can also just check the net income growth versus EPS growth. So here is ALT, Altimmune. Haven't heard of this one. Hey, what up, Luke? We'll look at CIGI. Don't worry. We'll check it out. So $300 million company developing of peptide-based therapeutics for liver disease. So they don't have any sales, really. So this is the unfortunate part. They have 5,000. Why is it like perfectly 5,000 every quarter? So basically they have no revenue, 5,000 a quarter. They're losing 20 mil a quarter. They have another company with a great balance sheet. They have no debt, 185 million of cash, so they can afford these $20 million losses because of all their cash on hand. They have a couple years of cash, but they're really waiting for some sort of FDA approval because they literally just don't have any sales right now. So yeah, so Gibson said, thoughts on WLFI dropping. Wait, WLFI. So yeah, unfortunately, Gibson, I look up that stock right there. I can't find that one. WLFI, WLFL. Can't find that one. Maybe it's not on my exchange. I apologize there. So let's look at Taiwan Semi right here. So yeah, here's how you can, we'll look at CIGI after this. Here's how you can tell if a company's doing share buybacks. So here's Taiwan Semi. This is a company I believe is a perfect, buy and never sell stock. There is some risks around like, what sucks is like we have to defend Taiwan, which is 5 feet away from China. We are gonna start sourcing our chips no longer from Taiwan. So that's what, and potentially we're gonna start sourcing it from Intel with a lot of stimulus. So that's one thing really hurting their PE. That we just can't source them from when they're that close to China. But anyway, they're trading at 25 times net income because of that. But this is a great company. Besides those geopolitical risks, I mean, without that, this would be a $300 stock. I mean, they have a 67% market share. They make those 2 nanometer, 5 nanometer wafer chips. Their market share keeps on growing. But the best part about them is the revenue growth and margin expansion. And this is in US dollars. The revenue grew by 55% year over year. So revenue's up by 55, net income is up by 80%. So what does that mean? That means they're growing their net margins. And by the way, Taiwan Semi manufactures the chips for NVIDIA. You know, NVIDIA just designs the chips. Taiwan Semi actually makes them. And are they doing buybacks? So Taiwan Semi is not doing any buybacks, but they do pay a dividend. And here's how much the dividend costs: $3.99 billion. They can look at their dividend yield. So they have a 1.26% dividend yield, and the dividend only cost $3 billion a quarter. They can easily afford that because they made $13 billion of net income this quarter. They can afford the entire year of dividends just in that quarter. So pretty cool. So let's see. Can you look at FLUT? Let's do it. Oh wait, no. Hold on. We gotta look at CIGI. So this is Colliers International Group. Have not heard of this stock before, but they're pretty much at an all-time high. And yo, I didn't even see that. No way, dude. Cherokee, dude. Thanks so much for that gift there, bro. I really appreciate that, man. If you got a stock you want me to look at Cherokee, let me know. Thank you so much for that. So here's Colliers International Group. Let's go see what they do. They have a very small dividend, a 0.2% dividend yield. They're in the real estate industry, so real estate services, engineering, and investment management. So let's just see how the total sales are growing. And total sales are up nice. They're up 19% year over year. So very nice sales growth at 19%. And then they had a little one-time adjustment to their net income. They really made around 100 mil of net income. So they're making some nice profits as well. Yeah, that sales growth is nice. Real estate services. Yeah. Anyway, I wish I gave you more thoughts on that one, but congrats if you own them. They're at all-time highs. Hey, Tangrika, thanks for the 28 roses. Thank you so much. I really appreciate that. Yeah, hey, dude, my charger is nowhere near me. You know what? I'll charge my phone once it's even lower. Oh, I have to go in 10 minutes anyway. No, I have to go in 10 minutes, so we'll rush through some more stocks here. I got a few people asking about SoFi. You know what? We'll do SoFi again. I do own this company, so I might be biased, but I love SoFi Technologies. And by the way, we'll be streaming later tonight if you want to hit the follow button. We stream every Sunday at this exact same time. Every Sunday for the rest of the time, I plan to stream at this exact same time and do another one later tonight. But yeah, check this out right here. And by the way, I saw nothing. I have no course book, Discord if you want to follow me. But yeah, this is the main reason I love SoFi and why they deserve to be at this $25 a share price. I mean, the financial services are growing like crazy. It's up 105% year over year. This is incredible growth. It's up 105% year over year after growing 80%. And that's after growing 222%. The growth of this financial services, like, look, 2022, this business was doing, 30 mil, 20 mil of revenue a quarter. Now it's 362 million just this quarter. So the financial services are growing like crazy. The lending revenue is growing like crazy. This is up 31% year over year. So the lending business is growing just as well. And people are really starting to take SoFi serious because they're really growthy. Sales are up 42 and they're making net income every quarter. 100 million of net income this quarter. That's pretty good. So I wouldn't buy this one at all-time highs. I'm not too ecstatic about that. But what time tomorrow? Probably around 12 or 11 a.m. Eastern time. Probably 2 or 3 hours after the market opens. Or yeah, probably 2 or 3 hours after the market opens. The market doesn't open tomorrow. You know what, guys? The market is closed tomorrow, but I will still be streaming tomorrow. Hey, if you want to hit the follow button. Anchor Innovations Technology. They make battery packs to charge your phone. Oh, Anchor. I've heard of Anchor before. Anchor Innovation Technology. So yeah, Anchor, you're right, is that battery company. I have a portable charger. I didn't know they were Chinese, so let's check this out. We'll convert their revenue from Chinese to USD. Okay, I guess they won't translate it for us. Um, let's see. So this is in USD. So here's what we can see. This is all that matters. They're growing. Wow, they're growing like crazy. So after growing 42%, they're up another 32%. And on that, they made 90 mil of net income. They're pretty much making 90 mil in net income every quarter. So this company's doing great. I didn't even know they were Chinese. I didn't even know they were public. And you get a 1.5% dividend. They raise their dividend every single year. That's Anchor Batteries. Thanks for that, Looney. I didn't even know about them. Can you please go over your largest position or yeah. So my largest position, which has led to most of my gains, like check this out. Year to date, we're up 42% or 45% versus the S&P. If I put all my money, all these deposits in the S&P, I'd be up 10%. So our stock picking strategy has done very well. Most of that game has just come from this one stock right here. This is my largest holding. It grew to that position. I bought all my shares, during this dip right here, and they just had phenomenal earnings. This is an HVAC play, a heating, ventilation, air conditioning company with insane pricing power. I mean, this net income is ridiculous. After doubling the previous year, it's up another 72%. No investor expected that, not even me. They have incredible pricing power. Their main growth for FIX, the main heating and ventilation businesses, have been growing from data centers and Bitcoin mining rigs. They literally install like these cooling pipes right into the server racks. They're actually more effective than water cooling. And there's been a lot of upset recently about like water cooling, draining, like data centers just draining water. So Comfort Systems is a cool one. Pun intended there. Okay, so oh yeah, okay, I got 8 more minutes. Let's keep going here. FLUT, did I not go over that one? Flutter Entertainment. So this one's at an all-time high right here. So $54 billion company. They're at an all-time high. So, I can't cover what this company does, but if you read in the middle, that's what they do. And the business is up 16% year over year. The net income's actually, this was a one-time adjustment. They didn't actually make only 37 mil. They really made about 280 mil of net income, give or take. So they are making a lot of money. I can see why they're at all-time highs. They basically just had a record profitable quarter. Market closed, start at 2 p.m. where people can sleep in and get good rest for Tuesday. Yeah. Sometimes it's nice having a 3-day weekend but it does get boring sometimes. All right, so Lennar Group. Hey, you know who just bought more Lennar? It's actually Warren Buffett. So if you go to the Buffett watch list right here, Buffett's most recent holdings or his increase in positions, he bought a ton more of LEN. He's been buying a lot of these residential home building exposure stocks like Pool, Lennar, and also he bought for the first time DR Horton and LAMR, which is a billboard REIT, real estate investment trust. So let's look at LENR or Lennar. This is a great home builder, and the home builders always trade at such low valuations because they're cyclical, but because they trade at very low valuations, they have great dividend yields and low payout ratios. So they're trading at 11 times net income, and here's what you get. This is very rare. You get a 1.5% dividend yield, and the payout ratio is only a 14%. They could literally afford to double their dividend to a 3% yield, and it could easily afford that. So yeah, they're a home builder. So 93% of the revenue comes from the home building industry, which has seen some struggles recently just because of high rates, but they're going to cut rates next month with a 90% probability could bring some growth back. So yeah, sales are down by 4%. Net income fell by 50, but they're still printing a bunch of money. And even after this 49% drop, that's priced into this. They're still trading at 11 times net income. So pretty cool. My exposure to home builders is actually CSL. They're a home builder adjacent. They mainly fix and repair roofs. This is a roofing and insulation company. All this, it's really boring, but all they do is repair roofs and do insulation. And hey, look at that. We got a dividend. So our 13 shares is paying us a $14 dividend. Not too shabby. They're our largest holding in there. What app are you using? Yeah. Hey, by the way, this is my favorite app right here for analysis and stuff. I keep my cash in here as well. I'm on a brokerage right here. If you want to get it, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. I love Carlisle. Me too, Lopez. Carlisle it is a really great one. They're also a huge buyback name. Very nice dividend growth here. Like, check this out. We just looked at that home builder. Here's, in my opinion, maybe a superior company that I put on a watch list, but they're not a home builder. But look at this. another one where you get a 1% yield and the payout ratio is only at 13%. This is a dividend king, by the way. They've been raising their dividend for over 50 years. They never had to cut their dividend a single time, not during 2008, during 2020. They actually rose their dividend during those times. And the best part about Carlisle is actually the share buybacks they're doing. So this was a one-time adjustment from selling off a business. One reason why the revenue has been slowing is because if you go to customer investing activities, they sold off a business to Amphenol Group. Yo, I own that company too. So they sold off their interconnect business to Amphenol Group for just over $2 billion. So that's where this huge inflow of money came from. That's why the sales have been declining a little bit. Oh, hey, look, there's my little video I made about this stock right here. I'm the top comment. Okay, anyway, or I'm the only comment since May 1st. So no one really talks about this stock. But anyway, the best part about Carlisle Group is actually the buybacks that they're doing. So if we scroll back down here to the issuance retirement of stock, they're spending hundreds of millions of dollars every quarter buying back their own stock. This is the reason that they're my second largest holding. I have $5,000 of Carlisle. Okay. Big fan of Lennar. Also caught a great move on Rich Ticker Bot. Hey, nice, Jay. Carlisle produces EPDM roofing in Illinois. Hey, yo, Steve, nice. You've heard of Carlisle? Yeah, they mainly, there's so much pent up demand in the re-roofing cycle. Like there's so many roofs that need to be repaired, and Carlisle's here to benefit. And they're also less cyclical than the home builders because, if you have a leak in your roof, you're going to get that repaired right away before that leak starts costing you way more damage. So I really like them. Do you own Eli Lilly? I do not own Eli Lilly, but here's what I love about them. And here's why I really like them. Their revenue stream is just ridiculous. I mean, they have all these, there's like Zepbound, for example. This is their weight loss prescription. They just create these prescriptions out of nowhere and they just get a ton of sales. Like Zepbound, they created this one in 2023 after the hype around weight loss prescriptions. And now it's 2.3 billion of revenue just this quarter. I mean, so this is their weight loss prescription. Mount Jaro, this has been their huge growth driver. I mean, they created this one in 2022, literally with 16 million of sales. Now it's 3.84 billion, 100% increase. So Eli Lilly, I think, is a great stock to just buy and never sell. And you get a near 1% dividend with this company. So Eli Lilly deserves their high premium valuation. They had a stellar quarter. But there could be some regulation around them. The boring stocks are usually the best ones. Yo, I agree, man. Like self-storage does really good. Like I own McDonald's, for example. The roofing stocks like Carlisle, United Rentals. Dude, this is another one of my best performing stocks. They're at an all-time high. United Rentals, all you do is you rent stuff from them. Like you rent forklifts, trucks, mats. You just rent stuff from them, and or not so much. Like people, but businesses rent from them, like the construction industry. But United Rentals, these boring businesses are doing great. And like comfort systems as well. All they do is, HVAC, heating, ventilation, air conditioning. TikTok saying I'm AFK. And this company also does the electrical work for them as well. So unfortunately, I do have to go. I can look at one more stock here. Home Depot. Let's look at Home Depot too. Yo, this is a great dividend growth stock as well. By the way, if you want to hit the follow button, we go live every day. I'm going to probably be doing another live stream later tonight, but we stream every single Sunday at this exact same time. And we usually do one at 8 p.m. when the market opens, but the market doesn't open tonight at 8 p.m. But yeah, you get a 2.24% dividend yield with Home Depot. And notice they raise the dividend every year. It used to be $6 a year. Now you get $9 a year in, qualified dividends. They trade at 27 times net income. They're making pretty much 3 to 5 billion of net income every quarter. So Home Depot is a beast. And, the home residential sector's looking bright in a lower interest rate environment. So it looks like we're going to cut rates next month. Opinions on MO. So this is one of the few companies that has a sustainable, very high dividend yield. And again, these very high yielding dividend stocks usually don't outperform the market in the long run. Like this stock is the same price that it was back in 2016 when you don't include the dividends. So the actual stock price is the same price it was back in 2016. But what you do get with this company is a very high yield that's completely sustainable. You get a 6% dividend with this company. And here's how you can tell if the dividend's safe. And they made 2.4 billion of net income this quarter. It technically was a one-time adjustment. They really made just around 3 billion of net income. Same with last quarter. They had these weird adjustments from I can't say what it is just because the sector, but here's how much the dividend cost. It only cost $1.72 billion. So they're making well over 1.72 billion of net income a quarter. So they actually have room to raise their dividends. Since they have so much leftover money, they're actually doing a lot of share buybacks. So net income fell by 37, but net income per share only fell by 36. So they're just a nice dividend play. What time tonight? Since it's not open, probably around 7 or 8, probably around 8 o'clock tonight. Small chance I won't do it, but probably around 8 o'clock tonight. So basically, in 6 hours from now exactly, I'll probably be streaming. And if you turn on notifications if you want to hit the subscribe button. So AACG Meta Platforms. Oh, let's look at Meta right here. That stock looked like a micro cap. So very last stock we'll look at because I have to literally be out of here by 6 or I mean by 2 p.m. Meta Platforms, they literally have 3.5 billion daily active users. They have, it's incredible. Half the world is pretty much on one of their apps a day. Dude, this margin expansion, this is a $2 trillion company with 40% net margins. Sales are up by 21. Profits are up by 36. They just acquired Scale AI for 15 billion. They bought 4% of the Ray-Ban's parent company. Which is also publicly traded. They just introduced ads to WhatsApp. So, after they bought WhatsApp and their original slogan was no ads, no games, no gimmicks ever, they're introducing ads to WhatsApp. That'll be a huge earnings tailwind. The Oculus division seems to be growing. They have a super investor, they call them super intelligence AI team they're building. So that's what this huge capex number is. Mark Zuck owns 14% of all the shares. But anyway, yeah, hey, Doc Holly, if you want to get this, by the way, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this low brokerage, I'm on this app. It's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So if you sign up and deposit $100, we'll both get 5 free stocks. Or you can just go on Google and type in Moomoo. But I'd appreciate if you use my affiliate link. But anyway, I'm going to end the stream here. I'll be live in 6 hours from now, most likely. I hope you have a great rest of your day. If you want to hit the follow button, we stream every Sunday at this exact same time. Enjoy your Sunday. Happy holidays tomorrow. What is it? Labor Day? I forget the holiday. But anyway, have a great day. And thank you for everyone on the YouTube stream. I'm really trying to build up the YouTube channel. So thank you so much for being here. And if before you go, I'd really appreciate if you hit the like button. It's Will says, you ever get around making a Discord? I do. I will eventually make a Discord, but I technically do have a Discord. It's in the link. It's in that link tree right there. It cost $1 to join, and I used to have a Discord. It had like 40 people in it, and a bunch of people got DM'd by these scammers. A guy got scammed, and I just shut down the Discord. So if you join the Discord, there's no one in there. It's mainly just for. I wonder if I can pull it up right here. I'll pull up the Discord app. I mainly just have this. Actually, I don't want to show anything. I'm not supposed to. I mainly just have Discord's mainly just there for someone to ask me or DM me anything. So anyway, here's my Discord. No one's in it, but anyway, it's in. See you later. Thank you for being on the YouTube stream. Hit the like button before you go.